Good morning, traders. Anthony Crudele here, and welcome to NinjaTrader Live. We made it through week one, gang.
All right.
We made it through a very successful week one. I'm joined live here in studio in Naples, Florida, with our senior economist, Tracy Shuchart, Shy Girl. And on the East Coast in Charleston, my boy Jimmy Cagnina, Cags, our senior market strategist. How you doing, Jim?
Doing great, man. Got a lot of rest this weekend. I am ready to power through week two, man. I'm excited.
Yeah, the gap up is the story right now. I think everyone's wondering, is the low in? Is it not in? Last week we talked a lot about this. I mean, the whole group, we had so many people here. We had so many people on live. I think that the low is a good low. I don't know if it's the low. I talked about how 59.30 I think is really going to be my target in ES. I think there's a really good chance it gets there today. You got end of the quarter. But, now that we're through, I mean, gosh, how many things did we go through last week? We went through rollover, FOMC. We went through, triple witching. We went through NinjaTrader Live launching. And, yeah, busy week. And so from a technical perspective, we're going to take a look at see what Jim thinks, as we get to the end of the Edge report. And you got me and Pharm, and of course we have Tanya today. So this morning, we're going to be getting to the charts. But before I do that, I mean, Shy, is there any news driving this overnight? Is there anything that's popping out to you that's saying, hey, you know what, this is why we gapped up?
Well, the headlines are futures are rallying because traders are snapping up, beating down tech shares. In addition, we also had Kevin Hassett, which is Trump's National Economic Council director. He was on the news on Sunday, and he kind of said the markets are overestimating the scope of these tariffs. So he kind of downplayed them. He said one of the things we see from the markets is that they're expecting that these are going to be really large tariffs on every single country. And I think markets need to change their expectations because it's not everybody that cheats on us trade. It's just a few countries, and those countries are going to be seeing some tariffs. So he kind of downplayed tariffs, and so markets are reacting positively to that. I also think I think this is all about options as well. I think, we had triple witching. Everybody's kind of re-hedging their positions, and I think that's forcing market makers to go in and buy the underlying because they're taking the opposite side of those trades. And so I think we've got some headlines and we've got some kind of technical reasons for this rally overnight.
And as we always say, when the macro goes with the technicals, especially in a counter trend trade, like if all of a sudden now you're starting to get, I'll get to my charts later, finally holding above that 8-day moving average, which just is that super short-term moving average, everybody. It's nothing fancy. You could use a 5, an 8, or a 10. I mean, I think it's kind of to each his own. But it just shows that we have some price stability now. We're not just tanking. And, when you get a little bit of a headline, you get a little squeezy rally. Jimmy, Shy's talking about the options markets. What did you see this morning with Menthor Q? I know we're going to get to that, but before we look at your charts, did anything pop out to you that this morning that, maybe you could plug before we get to your charts this morning?
Yeah, I mean, it's a complete reversal at Menthor Q. I'm looking at their Q score right now. We were in a negative gamma situation all of last week. I opened it up this morning, positive gamma situation in the NASDAQ and the E-mini S&P, and everything's neutral from volatility to options activity to seasonality. So it's a complete shift from that point of view. And I think what we're seeing right now is these markets are so fickle, Deli. It's like risk on. You snap your fingers like Thanos. It's like risk on. And then everything behaves that way.
What's really interesting about it may not be about tariffs. Just 7 stocks accounted for the entire year-to-date losses in the S&P 500. Everything else was actually up 0.4%. So it was really 7 stocks that have been dragging the index down, which is crazy to me.
Yeah. I think for today, the key really is to stay in the gap And, you know, as we've got everybody in here this morning, I mean, first of all, I got to tell you what, kudos to the chat. You guys coming in every morning with us, engaging with us, you know, taking shots at me a little bit for maybe some hair days. I know there's been all sorts of, the comments have been great. I love it. I want to know what you guys think in the chat this morning. Do we fill this gap? Do we gap up and go? I mean, what do you guys think? Let me know what you guys think, because I'm very curious. I mean, we've had such an energetic chat in there, Shai. There's been so much fun in there. I've been going back, looking at it each and every day, and I'm going to stay more engaged with it every day. You know, one thing I want to do a little fun thing while you wait to see what the chat thinks. Remember, are we going to gap up? Yes, or gap and go, or fill the gap? So I came to my desk this morning. I thought this was pretty cool. So number one is, you guys probably, if you're new to watching me, you know a couple things. One is, you know, I do collect some watches, and I've got a massive shoe collection. So my shoe collection continues to grow. It's a problem. But one of the it's one of the production guys who helped build the set. I got to give a shout out to him, Andrew. He's known me for years, came in and helped build the set at NinjaTrader Live this morning. I came in, I had a nice note for him, and I want to unveil, you know, a new pair. And we're going to be getting a shelf too. I think we're also, aren't we guys getting I think we're eventually getting a shoe cam, which is, I don't know, it's kind of fun. So these are the new pair he got me. These are pretty cool. I don't know what you guys think. And he sent me a note saying, he goes, I know they're dunks. He's like, and I know you collected Jordans. He's like, but those are really cool. It kind of goes with my outfit today. I mean, I might do a midday shoe switch. So I just wanted to give a shout out to Andrew on air and say, thank you, my brother. I appreciate that. They will be worn. And that's the thing is too, I buy shoes that I wear, you know, so I've got a lot of different gym shoes, and I wear all of them. I mean, there's maybe a couple pairs I might slight polish and not wear as much, but that was pretty cool. Yeah.
Anthony,
Scarpine. So it's the pick. Go ahead, Jimmy.
Exactly. I'm a size 11. So if you have any like hand-me-downs that are a little high end, you don't want anymore, let me know.
I'm a 10.5, man. I'm sorry. It's just not going to work. I don't know what, I mean, it's just a half a size off. It's that close, Shai.
That close.
It was that close. So as we see here, gap and go, gap and go. Hope a lot of people are hoping for a little gap fill first.
I think what will be interesting is we stayed below that 200-day all week last week. So we had 5 tries at that 200-day on the daily chart on ES. And so it'll be interesting to see if we close above it, full candle close above it today, or if we kind of pull back into it and they start, selling in the afternoon or something like that, and we close below it again.
What's the 200-day, if you go to the continuation charts, do you know what it is, Jim? I don't have it up. I don't actually even look at the 200-day, to be honest with you. The longest moving average I have up on my chart's the 34.
Yeah, I mean, I have the Go ahead, Tracy, sorry.
Go ahead.
No, I just have, my biggest
look
one
on
is a 50
chart.
EMA.
Yeah. I use the daily charts and the weekly charts most, so I use 50, 100, and 200.
So what is the 200?
I am.
Do you use a simple moving average, Tracy?
So yes.
So
right,
5686, Jacob is saying in chat, or 5788. It's funny. The continuation is what I want.
Yeah, and a continuous futures chart, we're at 5802.
Yeah, that makes sense. I mean, just from thinking about the last 200 days, it makes sense that would be about the average, because, 400 above, 400 below ish. So, yeah, I mean, I think, when I get to my charts this morning, I think that I'm going to talk about why 5930 is in play. I've been using options. Ninja doesn't have options yet, but they're coming. And these are just the way I trade these days, is holding these longer term positions just because I'm not day trading as much anymore. And so I've got some weeklies expiring at the end of this week. 5,900. So I'm kind of hoping it gets there. And you're starting to see some movement in them too, because last week I bought them. All they did was kind of go grind against me, and today they're showing a little life, of course, because we're gapping up and with some volume and volatility. But Shai, anything? Give us kind of the lay of the land for the rest of the day for data.
Yeah, we have data. We have manufacturing PMI, composite PMI, and services PMI all coming out at 9:45 this morning. So different time for data today. Not our normal 8 or 10, but people will definitely be looking at those numbers for manufacturing and services.
Yeah, I mean, consumer confidence today. That's at 10 o'clock.
No,
Or no,
you
it's
know
at
what? I think
9:45. I thought I just saw that on there.
yeah, no, I think consumer confidence maybe tomorrow.
It's tomorrow. Yeah.
It's tomorrow, yeah.
Yeah.
We have tomorrow. We have Red Book, Housing Price Index, Consumer Confidence, New Home Sales, Richmond Manufacturing. So
Yeah.
a lot of data tomorrow.
So, Mondays, a couple things I will say to everybody is that when you get a Monday gap up, you got overnight Globex low in ES, NQ, YM, RTY. When you have all the indexes now working together, this was a big conversation last week. We've had divergence. You don't see divergence today. You're like, right now you've got S&P. They're all up just over 1%. The biggest upside leader is the NASDAQ, and the Dow is slightly just below, up just less than 1%. But ultimately, they're all working together. When you look across the board today, I don't see anything in the market that screams at me like, oh, maybe it's fear trade somewhere else to offset it. I mean, you've got Treasuries flat to down, not doing much. 10 years 4.3 today. I think that's kind of a sweet spot for a rally today when I look at everything.
Dollar's pretty much flat too.
Yeah.
I always look at the dollar. So
That's right.
not much moving there. We did have something interesting come out for you metals bulls, copper bulls. Like the best known trader is Costas Pintas. He used to work at Trafigura, and now he moved to Mercuria, and he's trading their metals portfolio now. So he is apparently uber bullish. He thinks we could see 12 or 13,000. That's on the LME, which puts us well above $5 for U.S. market. So just interesting. If you are a copper bull out there, one of the biggest bulls out there is making a huge call after this rally that we've already had.
Copper was a big mover a lot last year too. I mean, this is a market I think to keep an eye on. I don't want to get ahead of ourselves, but you guys going to cover this in hot commodities today?
Yeah, we'll definitely cover copper because we're, trading over $5 again.
Yeah. Yeah. And I think that today is just going to be a really a day where it's really all about this gap. If it doesn't get filled early on, I just feel like it's just a grind higher, man. I mean, that's just one way Monday. I know we talk about turnaround Tuesday, but I have, in my experience, had one way Monday catch me many times, Jimmy, where it's like, oh yeah, you know what, we're up or we're down, and it's just kind of going in one direction. It just continues to grind, and all you want to do is, because it's such a big gap up, is fade it, and it's just death by 1,000 cuts, So we'll see.
We'll definitely have to see. And again, remember, a lot of funds and institutions are repositioning themselves after their options expired on Friday. So something to be aware of too.
Yeah, well, it's about that time. I'm going to turn it over to Jim for the Edge Report. Give us some Mentor Q data. So over to you, Jim.
All right, really quickly here, we have that 200 simple moving average here that we just put on the chart. We're approaching that. We're above that 21 EMA. This is the E-mini S&P. This is a daily candle chart. I'm going to drill into a intraday chart. I know there's a lot of lines here, but let me just go ahead and format this a little bit better because it's going to show our Mentor Q gamma levels. We have a pretty good line in the sand down here, call resistance. We traded through it early on the restart last night, and that's at 57.50. This is call resistance and 0 DTE call resistance and gamma wall. So this is going to be a tough line to get back through. And no, it's like a long way away, and it is. We have the 1-day max. We've already achieved that during the London session. We have a blind spot 1 that we've already achieved. So we're moving. All of these levels right here are on the downside. If you look at the upside, there's a lot of blue sky. I guess it's black sky because I got a black background, but there's a lot of blue sky all the way up here to the next blind spot, Menthor Q blind spot at 58.30, and then R3 is above that. Could we get there? Sure, for sure. So don't think we can't, but who knows what's going to happen. In any event, all of the areas of support are below it right now, even our two. So we are moving here in the E-mini S&P. We could do the same peak for the Nasdaq. Let's pull that up. I deleted all my March contracts, so I didn't accidentally click on anything stupidly and give some bad advice. All right, so here is I got to do my up part. Sorry, guys, I should have done this before we started here. Just going to reload this data here really quickly and get my lines a little bit better. We're at that 1-day daily max at the R2. When these two lines, when we got a pivot and a 1-day max at the same level, it's a super important area of interest right now. And now this area of interest has kind of defined my short-term area of support right now. And that's approximately 2028, 22, I'm sorry, 2228 spot 5. So again, regular retracement here would be kind of normal. We have that JAX 3 level also is the next step down, and that's pretty close to that 2200 level. Call resistance again, similar to the E-mini S&P, pretty far south here, but not as far south based on the price action, right in the middle of the opening for the, this was kind of pre-market for London, but that's approximately 2150 even. And then JAX 1 is all the way down here at 2100. So again, we're starting to see this shift in gamma a little bit in some of these markets. Everything is up pretty high, as Deli mentioned, on the equity markets. Equal weight futures, we don't have a data point yet, so don't look at that minus 53. That's not, we got to wait for the open to get that equal weight futures data here and to see if this is going to be 7 or 8 individual equity stocks lifting this thing, or if all the market's moving up. So that's why I love that equal weight futures later on in the day. It's not a tradable thing yet. There's not a lot of volume in it, but it does have some market makers in it, and you get a good sense of where price is based on that. Let's shoot over to crude oil really quickly here, because crude oil is also on the move. Again, we have a call resistance way up here at 69 even. So that's a target for the bulls. R1, we've traded through it the whole time. It's not in play anymore. Previous sessions highs, we're still trading above previous sessions highs, another very important area of interest for me. A couple of JAX levels below there. Pivot's pretty far south down here, around 68.20, and then a high vol level, which is nicely defining the daily support area here in crude oil. So there's all sorts of potential here, but I'm looking for a regular retracement back down. Just set aside the fundamentals for a second, or the macro for a second, and I'm just going to draw a fib line. I'm going to go from the session low, click once, to session high, and you can see a nice fib line retracement back to a textbook 31.8. Didn't quite achieve that, as often is the case, but this is looking pretty strong to me going forward here for the next, I don't know, half hour, 60 minutes, short of any what I would call unplanned news. One other thing on a daily on crude, you're seeing a subtle breakout of a long-term consolidation range right here. This is, let me kind of move this so you guys could see it. So this area, this rectangle on the top, area support, resistance, I'm sorry, rectangle on the bottom, area support. We've been trading through it ever since May 5th. And then boom, we have a break to the upside right now. We're trading above the rectangle. We're trading above that 21 EMA. We're trading above the 38.1% retracement. I defined the retracement from this peak high right here on February 20th, all the way to the peak low. That was the recent most contemporary trend. That's why I did it that way. So again, we get it closed above this rectangle here. We could have a little bit more upward momentum, all things being even in the WTI crude market. Let's pivot over to gold really quick. Gold. Let me just adjust this for a second, folks. Yeah, so gold, again, gold broke through. We had this nice area of resistance. We broke on through it. traded above it. Now, kind of a regular retracement that's kind of failed. We wicked through that 8 EMA, and buyers came in and said, no, we don't want to go any lower. This was last session. This is a daily candle. And right now we have a baby candle. It's a little tiny candle in the middle, not sure where to go, right at the piercing line of that previous big red-bodied candle there. So crude I'm sorry, gold is being resilient here on the upside. Let me go ahead and just get rid of my fib I did this morning because the charts, the candles ate my fibs. Let's just move this over a little bit and look at some gamma levels here. We have put support, which is really at this point, this blind spot also at 30.40. That's really resistance right now, right? We couldn't get up there right now. Will it be a target area of interest for the bulls later on today? Quite possibly, if we continue with this trend that we've seen. The trend really started too, in the middle of the night last night, and kind of went through that Jack's 1 level. Remember, this is the most important gamma level, that Jack's 1 level, and that is at 30.25. The pivot was not in play at all really today. Jack's 4, not that important of a level. We're trading below it right now, driving back up. Volume profile is not bad yet. I expect it to get more mature as time goes on. Right now, we got the point of control right in the middle there, which is good. It's 30.30. And, the value area here is on my radar screen, right? And when I see a normal volume distribution, a lot of times that's value area trading, selling the top of the value area, buying the bottom of the value area, or at least using that point of control as a magnet. Now, it's not perfect yet, but I think it'll get more. It will mature as time goes on here in the gold market. 10-year notes. Let's shoot over there real quick. ZN. Selling off. We mentioned, we mentioned this earlier. We have really a really nice high vol level, put support, OD 0 DTE, and high vol 0 DT. 3 things right there at the bottom. We're calling it 110 and 24, 30 seconds. S2 is also right there. So 2 areas of interest really close, holding a support right now. But this is a sell-off, no question about it, right? This is moving inversely with the equity market today, kind of, and that's surprised, right? When you're thinking about risk on instead of risk off, it's the opposite. And so I'm not surprised that these things are so strongly inversely correlated today. It's not always the case, but that's what we're seeing today. And from a yield point of view, let's drive over to the yields here so we can get a little bit more color. I'm using the CME Group's micro yields, right? We have the 10-year micro yield on the top. We have the 2-year micro yield on the bottom. I'm just going to go ahead and adjust my measurement tool here a little bit so we can see what the separation is, what the spread is. We're about 33 basis points separate between the 10-year and the 2-year. This is a normal condition. 10 years yields higher than the 2-year, so not surprised there. But that's what's happening. Remember, these yields are inversely related to the price. If you're trading bonds, if you're trading notes, these things are upside down. So remember that as you're going forward here. And let's take a look at copper really quick, since Shai mentioned it. I have not looked at this yet today. I'm embarrassed to say, but I will. We've achieved all of our extensions, right? We've achieved all of our extensions. I'm going to go ahead and just even delete it, and I'll reset that extension later. But look at these moving averages. They're all just shooting up. 8, 21, 50, EMAs. This is a tremendous rally. Broke out of the double top, way in our rearview mirror right now. And I don't even, nothing but blue skies up above. So we'll try to do some more projections here from a technical standpoint on copper. But boy, we are moving. And just lastly, that 1-day min is at 5.19. 5.19 is that 1-day max. I'm sorry, I said 1-day min. 1-day max here for the gamma level. That's a target for the bulls. All right, back to you, Deli.
All right. Well, before we get Pharm in here, I want to talk about the CL breakout, Shai. If you remember last week, I'm not talking to you, I'm talking about everybody else out there in the chat. If you all remember, how about that? What did you say? There was a $20 million bet of $100 oil?
Yes. So, $20 million, but you have to realize it doesn't actually have to get to 100 for that option to make money, of course, but quite the bet for sure. That was in Brent, but still.
Oh, it was in Brent, but yeah, but still, I mean,
But still, I mean, we were, trading around here at the time that, we kind of pulled back after that bet was made. But we're kind of starting to rally a little bit more. We're breaking above Jim Sandwich.
yeah, Jim Sandwich. He's got everything's related to food with him on the charts, I've noticed.
Right. So, but what's really interesting is, we've kind of been holding that $65 area. And this is a really important area because this is where shale break-evens are. Not for every basin. Some basins are more, some basins are less, but the average is around 65. And I think that's why we keep kind of seeing that level get bought up every time we go down there.
And so what does that mean for the industry if it's the shale break-evens and we start to go up? Is that beneficial for them?
Well, absolutely.
Yeah.
I mean, because they'll make money. If we went to 50 where, the administration says they want to be, then you're going to exacerbate the problem and you're going to see production come off, and then you're going to get another spike in oil prices that you don't want.
So two things come to mind when I look at the crude oil chart, the copper chart, and really the metals chart. Maybe not the metals in general, but just when you look at crude and copper, is inflation coming back? I mean, is it?
Inflation? In fact, we are seeing inflation. I posted a chart on Twitter, or X, sorry, this weekend that we are seeing inflation starting to tick up again. So I'm sure central banks are keeping a close eye on that. Sure.
Yeah. And when I think about just, we got all this data this week again, market's starting to rally. You've got some little things like crude oil and copper that could add a little bit of concern. I don't think it's going to be much of a concern today. I think we're going to need to see consumer confidence, which is tomorrow, and some stuff later in the week. But ultimately, back to equities today, just not a lot. I mean, minor things to look at, nitpicky, if anything. But
yeah, absolutely. I mean, what's really interesting is I saw a chart, and we have basically consumer sentiment, business sentiment is terrible right now. It's at the lows. And yet you have Dr. Copper, which is supposedly an indicator of economic growth, globally, is saying the exact opposite, right? Because it's rallying. So who's right? Who's wrong?
yeah. And like we always say, a little bit of inflation's good.
Right.
Right. And so, again, I look at it. You got 10 years, 10s, I was going to say, at 4.3%. You got rates not getting in the way of this rally. You got a little bit of inflation, not enough, I think, to move the Fed,
Right.
obviously, back to raising. That's not going to happen.
No.
I don't see that in the short term. Right. If anything, we're talking about, you and Tony Nash were talking about it last week, maybe a couple of, 2-3 cuts next year or this year.
This year.
Yeah. So, yeah, I know we're going to be getting to Pharm here in a minute. And anything else you think on the landscape for today? I mean, it always could be a Trump tweet that derails us. I don't see that right now. I think he's actually starting to quiet down a little bit. At least it feels like that.
I think they're trying to calm him down a little bit, especially on this tariff rhetoric. Because I know they said they don't really care what the market's doing, but he's watching it. So.
Oh, absolutely. Back to Percent last week, right? I mean, they're trying to downplay it. And I think the best thing they could do right now in this environment, because I think we look at it like the market is telling us it took a punch. I'm not saying that's the low, but it's a good low. And again, at the end of the day, for traders, all that matters is it a low to be traded that we can trade off of or not? And for now, when I get to the charts with Pharm, I'm going to explain why it is. Shai, we'll be back with you later today for the 9:45 data. So everybody, let's bring in Pharm here. But thank you so much, Shai. A lot of good stuff this morning with the macro. Really helps understand what's going on. So here's my boy Pharm. What's up, my brother? How are you?
I'm doing well, Deli. I see that you fell asleep on the buy button last night.
I did. It happens. And sometimes they work out for you. As we continue to push to new highs right now. I mean, you and I talked about this last week. We liked the low. We knew we had to get through triple witching. We had to get through Fed. We talked about all these different things last week. Because remember, we were pretty on top of it, trading it from, bearish, bullish. And then we kind of, all of us were towards the end of the week, we're leaning bullish. And Friday just was just sloppy.
Yeah.
I mean, but at the end of the day, it rallied. And then, I was looking at it going, I'm like, man, if they gap up on Monday, now that all this stuff is behind us, kind of sets the tone now.
Yeah, I mean, weekly gap ups. I definitely get a bit hesitant to fade weekly gap ups. I mean, we'll see if it holds, obviously, but I mean, this thing could come down quite a bit from here in terms of a pullback and still just be way, way, way above, Friday's high anyway. So, we're a little stretched to the upside, but I mean, if we get anywhere near Friday's high, it would be insanely stretched to the downside in terms of positioning. So there's a lot to give back before, sellers get to cheer anything this morning. So.
Yeah. All right, everybody, let's go to my charts first. And, last week in the middle of the week, it was the Fed day. I start with the Boomer Bollinger Bands. It's become a thing, Pharm. I'm just saying. I mean, it's become a thing. I'm not a boomer. Jimmy made that, so I don't know. We can't call it the Gen X Boomer Bollinger Bands. We're at the Boomer Bollinger Bands, so we just got to roll with it. Even though I'm not a boomer, for the record. But I talked about how when we looked at the Bollinger Bands coming back in, and again, they're a 20 period 3 standard deviation. I know chat was asking me that. When they come back in, it just shows mean reversion. Like we're contracting now, right? Volatility is contracting. That's bullish, right? And so I also look at the 8, 21, 34 moving averages. We have multiple closes above them now, which we couldn't get a close above them for what? How many multiple days in a row? It was like 2-3 weeks in a row. And now we've had multiple closes above it. I talked about 56.80 as a key level. Now we have this gap up and we're taking out a prior day high. I mean, I look at this and I feel like this is what I call a move that's underway now. And what it means to me is that the market has now proved to me on the daily chart that it's withstood enough time to where now as it's starting to happen, it's underway. So it's a move that I look at and I only look at longs now. So everyone knows I'm not intraday scalping anymore and I look at swing trades. But for day traders, what I like about using something like this when I think that there's a move underway, and again, you don't have to just look at my strategies, anything that you're looking at, when you have a bigger picture move that's what you feel is underway, like towards a target, the key is do not step in front of that, is to stay hyper-focused on the direction of the move that is underway. And that's what I see right now. So I see buy the dips is back in play in a strong way. I don't see a lot of resistance here. I think that we even had that, like there's a gap up there in the low 5800s. I know that Pax talked about the low 5800s. I don't remember what levels he said. It was like 58.14 or 13. A lot of times I'll go to Pax's levels because I don't have stuff. But I mean the 21 day comes in right around 58ish, 100ish, and I just think that they're going to get a 58 handle print today. And when I go to the 60 minute, let's go back to this. Let me move this out of the way. Actually, I don't even know that I want that on there now. So when I look at the 60 minute with a gap up, to me, anytime I see this, I don't even want to see my indicators on it. That's why I deleted it. When I see this type of move where we're going up and the Bollinger Bands even start to revert back in and the market can't rotate it all back down, it confirms longer term trend. All I want everyone to think about is when I show my stuff, the most important thing for me is always market environment, right? If the daily chart is got a move underway or I've got something set up that I foresee a strong probability of it happening now, I go to the shorter term just to see the action, to see if it's agreeing with it or arguing with it, right? It's a simple way to look at it. And to me, it's agreeing with it. Like even when I see a short setup now, like I might have gotten one on the 60 minute, which it didn't trigger, but just because the market's pushing through it. And so now I have to look at those responses and say, look at the market's going up, Bollinger Bands grinding up. For me, I get to the super short-term charts today, like I probably go to like a 3 minute and I wait for any sort of dip. I use order flow tools. I'm long only right now, man. That's just where I'm at. And you have all the markets going on all cylinders. Russell, NASDAQ, Dow, S&P, all look similar. all rotating up on a gap up from a Sunday night into a Monday. I think it's gap and go this week. Hard for me to see a reason for that Sunday night into Monday gap to get filled. That's where I'm at. We'll see what you think, Pharm.
Yeah, I mean, I think that's right. Long until proven wrong. I mean, you're leaving behind 2 weeks of inventory below you. And so I feel like this is one of these tricky situations, and we've all been there, right? Where you've got, spots above us. And certainly for me, you've got January low at 58.13 cash hours anyways. And, to me, 58.11 to 58.50 could be tricky, but it feels like one of those spots, right? Where maybe a week ago you were looking up at these spots and you're like, wow, I'm definitely going to short this and swing it, right? Well, I mean, now here we are with, again, 2 weeks of inventory trap below us and on a weekly gap up. And to me, it kind of changes things, or at least certainly makes me a bit more cautious, right? I'm not looking to jam longs into any key spots up above us, but to your point, buying dips. And I just want to reiterate what you said about, a short setup, right? You had a short setup that may or may not have triggered. What I think people get into a trap, sometimes is, we can know, I mean, you and I can absolutely know with a very high level of certainty that price is about to go down, right? Intraday, let's say. I think we're going to get a pullback here. It doesn't mean you have to take a short, right? You can just stay flat and look to take a long. Now, I'm not saying that's how all of today is going to be necessarily, but I think that's something that's important for traders, is that, sometimes you see price has gone, it's gone up too much, and maybe you see a reversal and you jump in and you want to short it. And that's not necessarily the play to me. Sometimes the play is just to stay flat and wait for a pullback long. So, I want to see obviously what cash hours does. This is a huge gap. Things are pretty stretched in terms of positioning of traders overnight. A pullback would be completely reasonable, either into the open, here in the next hour, or, at the open. And it doesn't necessarily need to be bearish. For me, I'll kind of get into this chart just a little bit. What I don't know if you saw me post on X, but I kind of got a little bit bullish on Friday in the 56.60s. And for me to get bullish is kind of scary because I'm kind of a perma bear, or at least I play one on TV. But to me, the way that, we came down into basically the low of Tuesday's range on Friday. And this was the second time that sellers had driven us back into, the previous week's range, right? And it's the second time that they failed to find any traction lower. So first of all, that's a couple of fumbles to me for sellers. But then additionally, the way that it felt like bulls put their foot down here in this lower distribution on Friday from the weekly profile. And they just lifted it. They just lifted it straight through, this LVN that we, really everybody was looking at, kind of your 56.80s spots, and then ripped it kind of all the way back up to those 57.20s that I talked about. And, 57.26, 57.30s, being key, for one side to control. And I mean, this is one way to do it. You just gap the whole thing for sure. So, we're leaving all this behind us. And so I'm definitely going to be cautious jumping in front of this, but also aware of the spots above me. So this is definitely going to be an important gap to sustain. If it doesn't, I think it could get gross, but I don't see any reason as of now to suspect that it does, other than, we probably do see some kind of a pullback into the open or at the open.
One thing I want to talk about that is so important with what you had said about if you get a short setup, you don't take it, you can stay flat. I think one of the mistakes that I see a lot of traders make is that they come in with a bullish bias. And remember, anytime a market has a bullish or bearish bias on your longer term chart and you get a one-dimensional day, that means that the likelihood of you testing support is very low. So which means that you don't get a long setup, but all your short setups get triggered. And ultimately, that's where they get in trouble, is looking at, okay, I think we're going to go higher, but I'm going to sell them here to buy them here. The most important thing that I have done is eliminate that. Find one side of the market that you want to trade, and you increase your probability immediately, especially if you're an index futures trader, because they're not in play every day. I mean, and when I say that, I mean that not every day is your strategy going to give you a winning trade. I mean, it's just not,
Right.
it's not possible. It's not feasible, right? And so if you could eliminate the bad trades, that already increases your win rate, right? I mean, it's Captain Obvious type of thinking, but what happens is most people just don't do it. They try to execute perfectly. They think they see more than they do, and ultimately they revert back to bad habits instead of just focusing on their prep where their good homework was done. They get an intraday and everything gets lost in it. And so I think you're better off, like even a day like today, if you just wanted to be short, you wait for really good short setups. If you just want to be long, you wait for really good long setups. There's no right or wrong answer to that. It's just a question of where do you spend, majority of your brain power, and you get hyper focused on it. That's where you find better edges. I just wanted to mention that because I thought that was good. Very important that you said that.
Don't always have to be in a trade, do we, Deli?
No, I mean you don't, and you don't need to. You don't need to be in, and in order to last long in this business, which is everyone's goal, the less you do, the more refined you get at doing the small things really, really well. I want to bring in chat to this. I mean, how many of you have been through this where you are bullish and you end up getting into a bearish trade and you're like, oh my gosh, I can't believe I'm into this trade now. It's because your short term, triggered something. I want to hear from chat because it happens a lot. And also, good morning, everybody, as the room continues to fill up, and give the thumbs up, the like button for Pharm for being here with us every day. And I say he's got a really nice hair. You're having a good hair day, dude. I got to tell you, it's solid today.
I got a little bit of sleep over the weekend anyways, and cleaned it up just a little bit, but I was looking a little ragged at the end of last week. That's for sure. It's early out here.
You look a bit refreshed.
I'm West Coast time.
Yeah.
A little bit. Yeah. I actually slept
I know. People don't even
10
understand.
hours
It's
or something.
5:42. Yeah, it's 5:42 in the morning for you, dude. That's not early. That's late for Anthony.
Right. Right.
All right. Back to I'll let you go back to the charts.
Yeah. So you mentioned a great example of it. I had actually given an example of that last week, right? I mean, I made that, not necessarily a mistake. I mean, I made money off the trade, but I was bullish for a day, and I said I took that NQ short, and like it worked, but I missed the long setup that I wanted on ES that day. Like I had mapped it out. I guess it was Monday because I had mapped it out all weekend. This is where I want a long ES next week and on Monday. And I ended up taking I don't know, what did I make? 50 handles short or something on NQ. And then ES probably went 50 to the upside. I don't know, which, with leverage, that's a much bigger trade. So I think that's definitely a pit that we fall into. I mean, fishing around here for a short, you've got VPOC shifting up into the highs, seeing some profit taking up here. It's possible that, we get that pullback into the open and maybe a trade sets up on the short side here for a little bit of a pullback, but you're probably going to be busy covering your short when a bid comes in and lifts it or something. So, I mean, we'll see. Again, this is pretty stretched, but you're going to have to give back an awful lot on this profile for it to start to look bad. But, cash session can do that fast, of course, because this is, lighter volumes. But, to me, going back to the 30s, you get into the meat of some of these prior weeks, right? You've got some supply trap there, and that could be potentially problematic. But I mean, again, anybody that's stuck short from the last couple of weeks and they wake up and they see this gap up, I mean, wonder what they're going to do, right? So you're going to have some sort of inorganic buyers potentially at the open to stabilize things, I think.
Yeah, and Pax talked about this over the weekend on X. Now the buyers chasing it a little bit into quarter end, which gets interesting. Again, when you look at where we are for the year, and I had talked about this weeks ago, we not always, that's not true. We a lot of times find a really good market low or market high in the first quarter. And so if you look back now and you haven't been long indexes, you have lightened up, now you can manage your risk really well here, right? I mean, you've had whatever percentage pullback we've had in S&P, NASDAQ, Dow, Russell, right? You've had that pullback now. Now you have a low you can play off of. That's why I think they can start to chase it, because now once a trader, whether it's a super big trader or a small trader, a bigger trader has got a much wider, risk parameters, they can trade much bigger, and they can do all the things that the small trader can't do. But ultimately, the concept's the same. If I have a low or a high that I want to trade off of, once I know it, now it's just adjusting my position sizing. And that's why the market can get chased higher from here, in my opinion, because that low is good enough, I think, to at least temporarily give people a chance to be long and manage the risk. And so, it's something to think about, because we think, oh gosh, they're already gapping up 1%. How much more can they go? Well, as we've learned, a lot more than you think.
Mm-hmm. Yeah, no, I think that's right. I mean, the low being good enough. I mean, I was looking for 10% in Q1. We got 10%, maybe a little bit more. I don't love the low at all, but like you said, it's not bad. And there were some things that I saw at the low that I did like. And for me, I added some long exposure and some individual names, not indexed directly. But I bought a bunch of AMD and some other things. And to me, you just have to, you can't ever get it exactly right. And so to me, you have to take your shot, and the market pulls back 10% plus on any given year in a bull market. It's probably a decent time to do some buying, right? Most of the time that ends very well. Is it possible that we get a nastier year and that's incorrect? That's absolutely possible, but you have the opportunity to stop out on those longs, and that's fine. So for me, I'm planning to hold those longs. And, if something changes and we start cracking things back down to the downside, I'm likely going to be short, during that process. And that, to me, sort of protects those long positions. That's the beauty of being a retail trader, right? I mean, we can just slap on some puts or whatever against these long positions that we might want to hold from the lows. And I just think that's, we have a lot more flexibility in there to not have to, panic sell. And we can just, I'll run AMD back to break even. I don't care. But I'm going to hold that and, see where it takes me, along with some other names. And like I said, again, if we start cracking this back to the downside, I'm going to be short. I'm going to make money on those positions. I'm going to be sad time that, my long positions are not performing well. But, at some point there's going to be some kind of a, potential weekly lower high, and we're going to be in decision time, right? Is this a lower weekly high to now take us to lower lows, or are we going to consolidate and make some kind of a multi-week balance with a higher low relative to, the 5509 low? And that's where it gets hard, right? And I like it when it gets tricky. But that's my plan. And that's how I managed 2022, was just, take longs at good spots. And, if we flip back down into a downtrend, I'm short into it. If I need to stop out on those long positions, then I'll do that. So that's where I'm at. I'm not going to stick to any kind of bias that we have to make some kind of better low than we did. And, to your point, I think there's, size money that can do the same thing here. I really would have preferred a better washout, the better puke and a really, really good low. But as you said, it is good enough.
Yeah, let's talk about that for a second, because some people may not understand that. You said it's not a great low, because some people may not look at volume profile on a low, right? They may not look at order flow on a low. They might just look at price, right? And so when we look at lows being made, I agree with you. As the low was being made, I looked at that low and said, I don't really love that low. And the reason is because, like you said, it felt like it spent too much time down there. It felt like there was too many opportunities to buy it. Like, we like to see a washout low where you see single ticks, you see, volume push into there, almost like a V-type bottom off of the low, where it's like, okay, I'm not in, no one's in, and everyone chases price up. Ultimately, I think a big part of that Pharm is it happened at a unique time. It goes back to this rollover type low, right? You're split between volumes. You had a lot going on with the FOMC, so I think that definitely contributed to it. But if you just take it and spotlight that low, I don't love it either, which, again, I go back to. I don't think that I'm not sure if it's the low. We'll never know it's the low until, we close out the year. But it is a good low. But talk about, I think, just in general, why you don't think that was a good low?
Yeah, well, the first thing before I get into that is I'll say that October of 2023 low wasn't that great. and look what we did there, right? So, I'm
Yeah.
not gonna be any kind of a purist and be like, wow, I don't like that low, so I'm gonna fish this short all the way up and try to, repair that. So that's not me, but yeah, really, I mean, a lot of people aren't volume profile traders, market profile traders. So, really just looking for that big washout. Like you said, you'd ideally want to see, let's say on your 30-minute candle, some just big, nasty lower wick that then just gets reversed hard and never revisited. High volume. I would have liked to see, let's say like NAAIM. It just kind of like faded to the 60s and then like mid to high 60s and then sat there. Like I wanted to see them like have plastic sheets on their bed. Like they just completely pooped it and just give me like 30. I mean, like 2022, just pure bloodbath washout. And then like I would have been like, that's probably the low of the year. I also really wanted that spot, I mentioned on X way back in December, 53.75 SPX. That was, of course, my levels are ES, but I was ballparking it, but call it like 5400, 5380s ES. I really wanted that spot. So I'm a little frustrated that I didn't get it. It would have been so juicy. I really would have hit that really hard. But again, this is pretty decent. I had 5506 as a big spot, and market makers had to leave me with my hands empty at 5509. But we at least covered, and we had longs on, non-index longs, and so I'm okay with it. But yeah, again, not fantastic. Some kind of big washout. Big lower wick, let's say on the 30. And then a strong reversal with that low never being remotely revisited is what I would like to see.
Couple things before we let you go today. One is, do you think that you've seen any of the tech names maybe have good lows? Because going back to what Shy Girl was saying this morning, how obviously the big seven took us up, the big seven have taken us down. I actually have been buying a little bit of an NVIDIA on my longer term portfolio. These are not trades. These are stuff like, I'm just buying, these positions. And of course I'm working stops in these as well. But I was looking at them going, man, NVIDIA just doesn't seem like it can go down anymore. What did you look at? I mean, that's saying it for now again, not indefinitely. Yeah. I think that, some of those names to me look like, okay, well, I can manage risk here. I think that's what it always comes down to, right? That's how a low is formed. Like everyone just goes, okay, I can manage risk here.
Mm-hmm. Yeah, that's exactly right.
So have you seen that in any of the big tech names?
I didn't look at like all of them necessarily and inspect their lows. I looked at a few. Some were okay, I guess. Some weren't great. The AMD low, for example, is fine. There's at least decent excess on there if you're a profile trader. And more important to me, with AMD is that it kind of consolidated in a range that outperformed the index. Like QQQ dropped, I don't know how many more percent before AMD effectively hit its low. And it was consolidating for a number of days, and then we swept those lows, and then it just ripped out of there. So, things like that are nice to see, the subtle outperformance versus NVIDIA, which that hasn't happened in, how many decades it seems like. But yeah, I didn't look at too many of them in terms of inspecting their lows, in terms of the bag seven, because mostly I've been looking elsewhere. I mean, I do think that ultimately the market needs those for us to rally. But outside of AMD, wasn't really looking to get too heavily involved in the big techs. Sort of for me, kind of been there, done that in the last few years, I guess. And so looking elsewhere, I was dabbling in Brazil and peeled off like 10-11% or whatever, actually, while the index was on the way down. So that was nice. So I'm kind of looking elsewhere this year, at least for now, than the bag seven. But, a couple decent lows and a couple of not really.
So let's lay out the plan for today. We've got the big gap up. We've talked about how we're leaning, both of us, obviously, more towards the bull side. What do you look for? What's your anticipation on the bell today?
So the things that I'm watching is basically last week's high, basically on ES1. Let's call it, which we effectively sort of rebid here. Let's call it high 60s, low 70s, right? We tagged, I want to say like 70 something was the high last week. But so to me, even if we got a pullback down into here, this is the overnight VWAP, maybe that's rising. Maybe we even cross this little LV in here. I mean, this is providing some protection. I really, get a little bit cautious when VPOC shifts up this high late in the session, right? So it reads to me as profit taking. These longs down here, probably taking profits up here. Now, where are they going to buy it, right? So you could drop a fib on here and some kind of a retracement, maybe a 50% from, low to high, or maybe from high volume area to high volume area. You could look there. To me, if we get down through, this spot here, we could rotate across, and that puts, a back test of at least last week's high in play with overnight VWAP sort of rising into that. That might be something that I look for, and that would be a decent pullback. And, after we get off here, I'll probably drop a few fibs and look for, where a nice rebid might come in. Maybe, like 73, 72, 73. It could bid as high as there, and that might be a decent spot to look for a bid to come in, I would say. So high 60s, low 70s is the first spot I'll watch for.
Targets?
Yeah, upside, I'm a little bit cautious up here into the 5790s. I've got like 91. So if you're on a non-back adjusted chart, 91 was the, I want to say March 7th high. And so I've been watching that. And so I would be a little bit concerned if we came up here, we swept that, and then we puked back below this overnight volume here, where, again, it looks like some profit taking is taking place, and then started cracking down. So that would be something I'd be a little bit worried about if we're trading higher. But then, again, I get really cautious into the January low, 58.13, because that to me was, I had drawn a big box. When we made that January low, I had boxed out 61.63 ES down to 58.13 as sort of like a big range. And then up into February, we swept the highs of that, reversed back, and then obviously we know what happened. It came all the way back down and then broke the downside. So to me, it's still relevant, 58.13-ish. But I've got more like 58.20s to 30s that I think are potentially more tricky than 58.13 itself, but it's definitely a key reference point on your chart if you're just looking at, January lows. So I'm definitely cautious on the upside. And we saw that last week, right? Like every pop was sold. So chasing rips was definitely not the way to go. But if you were buying dips, you did okay. And so that's sort of the plan until proven wrong, I think, today and for this week.
Yeah, I think psychology changes so much quicker in today's markets. Every year, I almost see an escalation of how fast we go from one market environment to the next and then back to another one. And I think a lot of traders get caught in that because it's like buy the dip just works blind for so much longer than you think. And then all of a sudden it's like, okay, now you only want to sell the rallies. And then all of a sudden it's like, oh, we're consolidation. And all of a sudden now we're, potentially do I have to chase a rally? And this is what makes index trading difficult because it does come in and out of environments quickly. It's why it's important just to lean on your homework, come in, slow things down, especially on a Monday now with a gap up. Easy to want to come in and take a piece of this some way or the other, like fade it or, think it's going to drive further. You got to let the dust settle a little bit, everybody. I mean, we've been talking about it all morning. We're bullish. I'm bullish. Pharm just laid out a great ideas for what he's looking at. Let the day come to you. Pharm, great to see you refreshed, my friend. Thank you again for coming in with your charts. We will see you tomorrow. So thank you again, my brother.
We'll see you, Deli. Thanks.
All right, Tanya Army, get ready. Hit that like button. Tanya was in studio all week last week. Now she's back home in her New York state of mind, coming from Florida. So when we're ready, let's bring Tanya in. And there she is. Hi, Tanya. So I don't have sound for Tanya yet. You look
Has to.
good with the background. There we
Thank
go.
Yeah, you're good. I said, yeah,
All
I'm back in
right.
the city now. Like, no more warm weather in Florida.
Yeah, I know you have your New York clothes on now.
Yeah, sweaters. Yep. Yep, yep, yep. Spring is not here yet.
We had so much fun.
Mm-hmm.
Yeah, we had so much fun with you here last week. It was a total blast, and then we had that great dinner the last night. I know you also did an interview with Pax, and
Mm-hmm.
so it was just
That's
a
about
total
to come
blast.
out
This morning we
like
were
this week.
talking.
Mm-hmm. Yeah, that's gonna come
Yeah,
out this
that's
be
gonna be
good.
cool.
Yeah, it's gonna be good. Yeah, we're gonna put it out in the next couple of days. It's we had a really good talk, and honestly, I think next time we'll have to do a longer one too. I think there's just so much to talk about.
No, absolutely. And last week, Tanya, what a trooper you were. We talked about everything that we had to go through. We were just launching NinjaTrader Live. You're in studio. We had rollover. We had choppy sessions leading into FOMC. We did a pre-FOMC, and you stayed true to form, patient, disciplined. Now, today's your data stream live as well. We've got a big gap up. A lot of the stuff is behind us. We've talked about that. Let's take a look at your charts. Let's see what you're looking at coming into this gap up Monday.
Yeah, we are gapping up here. Both on, you know what's interesting is I think ES is up more than NQ this morning, percentage wise. Yeah, I'm just looking at the daily here, and I think I had this marked out from the weekly last week. I'm just gonna definitely go to the weekly here, and I had this point of interest. I think we can definitely get up to here. Above like 2 weeks ago, that high. Let's see. And then on ES, the same thing. Let's see, I'm just definitely gonna mark that out on my charts. And let me just put on this little cross here so you can take a look. Yeah, the 2360s for NQ, and well, I think we talked about this last, like 5800s for ES. Yeah, I think we're gonna head towards that area. It's a gap up, so I'm not gonna be really rushing to do anything like chasing price wise, because you know, we can have a little bit of price discovery in the morning. And then let's go to the 4 hour here. Yeah, we've almost taken that back this entire swing leg. I think that's really interesting here on NQ and ES now. And I'm not going to be trying to fade a gap up on a Monday after rollover is finished. So I'm definitely just have that in mind here. Let me just put that back. I'm just going to go back to the 4 hour here on ES on the left. And I mean, I'm going to mark out that gap up too. You could potentially reach back down into here and then wick it to go back higher. That's a potential area too of interest. But yeah, I'm not going to be trying to like fade and short down into here. I kind of have that in mind. Like when I'm coming in, I don't want to, like, that's my plan. I don't really want to fade. I'm going to write that down so I'm not going to get enticed later on in the session to do that. Let's go here to 60-minute. Put 60-second, that's funny. 60-minute. We're like, yeah, we're reaching back up into there. We've just been slowly, I mean, we've been pretty methodically grinding higher since that gap up on NQ and ES. Yeah, I'm just gonna look for basically a morning manipulation at the open. That would be ideal for me. A move lower to then go up higher into those 5800s on ES and 2360s on NQ. I think that would be ideal. It'd be kind of annoying if we just completely just go straight up at the open, but I won't be chasing today. Let's see. We've just been pretty methodically going up higher there. Yeah, and we have this gap up. I'm gonna have to just be super patient this morning. I just keep reminding myself that. Okay. In Asia,
I love how you say you write it down too. I think that's so
Yeah.
important because when you write something down, I don't know about you, I've been writing stuff down all morning. I'm always writing stuff down, and it triggers something in the
Yeah.
brain.
Yeah, you commit it to memory more. I definitely think so. This is the 15-minute on ES. I mean, yeah, we keep using these down close candles as new support essentially. Like, so it's been pretty methodical, this move up higher. So kind of I always do prefer just the drop into here, but I'm also kind of thinking about that. If we do that, then the momentum might die out. So definitely just any kind of, I think, manipulation of this trend line would be great. If we just pop up at the open, then I don't know. We're up almost like I think we're up 1.5% on ES right now, right? I think so.
Pretty close. I
Yeah,
think,
we're up
roughly
1.5.
1.5 in both NASDAQ and S&P. Yeah.
Yeah. Oh, yeah. NASDAQ is up. Yeah. Okay. 1.75 and ES is up 1.5%. Okay. Let's go back to the daily range. Let's go to the daily so I know about how much we can move. I'm gonna put up the ATR here.
And one thing to note too, Tanya, real quick, is remember last week, something you and I talked about a lot is the divergence between the indexes.
Yeah.
That's
Yeah.
gone now,
It's
at least for today.
yeah, exactly, at those highs. So that's great. Yeah, I do like that. I really want this close on the daily candle to be closing above that wick. Those highs, that'll be really good if we close above those highs. I like to look at ATR the last 5 days. So it's about 460 on NQ. Okay. And I like to, yeah, I mean, I would love for us to close above those highs on the daily. This is what I'm talking about. I mean, it looks really strong. I just want us to hold up today. I don't want us to, yeah, if we hold up even half of this daily candle, that would be good for more upside. And then we could have like a sustained move up higher finally after a whole week of consolidation, accumulation. Yeah, last week, right? I think it can be pretty good opportunities. Finally, we could maybe have a change of pace starting today. And that would be actually a refresher. Yeah. So I think you were talking about this, right, on the daily. Yeah, where ES took out this high last week and NQ did not here, but now we are. So that's great. That's great for me. And I think we can reach up higher. I think the 5800s are in play today for ES. Yeah, we'll have to see at the open. It's about 905, 908 right now. Let's see the ATR of ES actually. Whoops. Right here. Some people like to look at like the last, we're at 101.49 for that. Okay, great. Some people like to look at the last 14 days. I like to just the last 5 for that for ATR because I just want to be more recent. Okay.
Yeah, Pharm and I talked about this, how we shift market environments so quickly these days. I think when you're using indicators like ATR, 5 days is better. I would prefer that myself.
Oh yeah, yeah, exactly. Because last week it went lower because it was a lower range because of rollover and FOMC. And we did have a lot going on last week.
A lot.
And this week, actually, we have 9:45 news. Correct.
Yeah, Tracy and I will be, we'll be popping in there to go over that data with you at 9:45. That's really the only time you'll hear from us. Otherwise, we'll let you go. But yeah, that could be market moving.
Yeah, I agree. It's a red folder. It could be market moving. I mean, I would, yeah, I'm probably gonna, I don't really like to trade the first 15 minutes of the day, so I'll probably, especially today is a Monday gap up, I'll probably let it do price discovery and I'll wait until after news to get involved in the trade. But yeah, I think that would be good. I wanted to check in on that. Like you guys are going to be popping in, okay, at 9:45 because yeah, it's going to be a news release. Awesome. Um, but yeah, I mean, I think I think a lot of people are probably coming bullish into today. So I never like it when everybody has the same bias, honestly. I always actually poll the chat. So actually chat, like, right, type in if you're bullish or bearish. I bet like most people are gonna type bullish. I don't really love it when everybody um is just so on the same page because then sometimes that just makes the market environment harder and there's more whiplash back and forth because there's too much um yeah, there's too I don't know. I don't like the sentiment to be entirely in my favor because, you know, most people they end up getting stopped out or something like that. So there could be more stops to be ran later. I don't know. I always like to think about it in that sense. I always pull my chat actually in my stream at the beginning of every day. Are you bearish or bullish? And and essentially if there's like 60% or more on one direction, because it's bearish, bullish, or neutral, I guess I have my own little indicator there. But if I'm in agreement, like if I'm also bullish, I'm typically like, okay, I'm gonna be a little bit more cautious. It might be an extra stop run there. Because it just
They
seems
just
too
ran the
easy.
poll for you.
If it just
So,
seems too easy. Oh, you guys did? Okay, cool.
yeah.
Nice. Because yeah, if it just seems too easy, it probably is. Okay,
What
nice. You
gets
guys
interesting though,
did.
Tanya, is that everyone might be coming in bullish, but they're all going to get potentially, if we rally straight up, bearish triggers because they're going to
Yeah,
get the resistance first. So you never know if people are just going to take the short trades even though they're bullish.
I know. I'm gonna avoid that today because I typically if I see such a strong move at the open, and then it doesn't retrace to where I want it to retrace, and then I try to like fade it to where I want it to retrace to buy it, it typically doesn't really work out because there's a reason why I didn't retrace because it's just so strong. And then, you know, and then I just for a short-term scalp counter trend, it just doesn't work out for me as probability sake enough to be worth it. And also like then I'll probably miss the move on the upside that was easier on the mind and also just like better opportunity. So that's why I'm kind of just, yeah, I'm gonna write that down. I'm probably just gonna try to long today. Um, yeah, no, I am just that's my game plan because I don't want to I'm not gonna fade this a gap up like on a Monday. Yeah. And if I end up being wrong in the direction, it's fine. I'd rather be wrong than trying to be a contrarian, I guess. Yeah. So we'll see. But did we put up a poll? Okay, cool.
Yeah, the
How
poll.
yeah,
Yeah,
we have
we got a lot of people
49%
in here.
bullish.
I,
Okay, cool. Oh wow,
yeah.
650 people here. Nice. Hit the like button, you guys. Wow, we're already before the open. Nice. We have about 15 minutes left until the open. I'm on the 15-minute candle, like as my time frame. I like that as a bellwether chart. I think that's always like a good stance to have there. Yeah, so it's our little gap up. We have our market shift there. I mean, what happened here? Oh yeah, we were opening up lower on Friday. Oh yeah, Friday I didn't trade because I was on a plane. Yeah. Oh yeah, we gapped down and we filled it. And we took back this hourly structure. And yeah, we shifted higher. It's nice to see this. On the 4 hour, I think I wanted to see again, that intermediate term high got broken. Yeah, okay, cool. I'm really liking that this high got broken to the upside, and now we're likely gonna fill in this gap, this FEG from here to here, with this candle. So this 4-hour candle ends at 10. Okay, I'll check in again on the 4-hour later to see how that closed within this area. Right, it would be ideal if we close above it, and then maybe then we could have some more structure develop here to go higher. But yeah, that's gonna be good. Let's see on the hourly. It's 9:15. 15 minutes until the open, you guys. Vote in the chat whether you're bullish or bearish. Okay. Yeah, I mean, yeah, we can, if this is in play, and then also the swing high, of course, is in play later. But yeah, I mean, I'd rather just go for midpoint of this area, like 2400s. If I'm bullish, I don't really want to be going for that the extent of the swing high. Oftentimes it'll like pause before it or something. So keeping that in mind, but it's hard to, on these days, it's important to not FOMO or chase for me, because like even if let's say I lose out on a move at the first 15 minutes, it goes straight up. It's over time, it's really building the discipline for me of not, okay, that's not my game plan, that's not my strategy. More times than not, that's actually not going to work out for me. So I'm basically just gonna let the first 15
These are
minutes do
days
it.
where you get tested.
Yeah, exactly.
You get
Yeah,
truly tested.
You're getting tested. You're getting tested. You're because like a lot of people are gonna feel itching to chase and such, like things like that. So I'm interested to see. We have about 13 minutes left until the open.
And before I let you go today, because you know here on NinjaTrader we let the streamers go and go live. I just want to show you something, Tanya. I got, and you remember Andrew from our dinner, right? And he, you know, helping us build the
Oh yeah, yeah.
the studio set here. Yeah. So this morning, I don't know if you caught it. It was pretty early, but so I come in this morning, and I know you. I'm showing this to you because I know that you and we both have a love for shoes.
Oh my God, you got sneakers. Okay, yes, yes. Let's see.
So
Are
this
they
morning
NinjaTrader
he comes in and he
orange?
goes, Anthony, thanks for dinner. And I said I wanted to give Andrew a shout out for doing it. And like I said, I'm like, I can't wait to show Tanya because you and I talked how we love sneaks.
Ooh.
And so he put these on
Ooh.
my desk this morning.
Oh, those are really nice. Wow. Yeah, those are nice. Those are
Pretty
fire,
cool, right?
especially for Naples. You need them all white. Nice.
That's I
All white
figure.
Jordan.
I'm
Let's
like
go.
Tanya's gonna love these.
I should bring my I have a similar one, these orange ones. If you have time, I'll wait 1 second.
Getting to know Tanya was great. I mean, her and I have a love for kicks. We love our sneaks.
Okay.
I can't wait to see what she said. She's got an orange pair. I don't own an orange pair,
There we
and,
go,
and the whole
like
studio is
Ninja
orange. And I'm
Trader
like, I need to
theme.
get an orange pair. Here we go. Oh, those are cool.
We got matching Jordans then. I mean, yours are all white, but mine are orange like NinjaTrader. Chat vote, who has the most swaggy pair of shoes? Vote.
Oh, I got
Who has
to.
more drip?
We already know that you're going to win this one.
No, but yeah, I love. I mean, you can't go wrong with another pair of sneakers. Honestly, I have like a lot. Yeah, I don't know if I have 11 pairs or 14 pairs of sneakers, and I don't have enough dress shoes. That's the next on my list. But I've been just wearing. Yeah, I've been just wearing sneakers to restaurants. Like these are upscale sneakers. You know, you can put your sneakers and a dress
Dress shoes
together.
are overrated, Tanya.
I have like one pair of.
All right. Well, I'll leave you. I know. I'm all sneaks now. I'll leave you to the stream today. Thanks for sharing those sneaks. Again, I'll be back around 9:43 to check in, and we'll get ready for that data. So, all right, Tanya, I'll be back
All right,
shortly.
sounds good.
Great seeing you.
Sounds good. We'll
See
see you
ya.
at 9:45. Okay, cool. Someone said Tanya's orange for the win. Awesome. That's funny. Tanya's J's are cold. Yeah, Tanya's got the drip. We're drippy here. Okay. We have 10 minutes until the open. You guys, yeah, let me know if you're bullish or bearish. I think most people voted bullish. Yeah, let's see. The poll is over. 50% bullish, 32% waiting to assess the open. Smart people, and 17% bearish. Okay, that's good. Sick. Okay. This 15-minute structure, I mean, we're just like building up this trend line liquidity. Like potentially we take that out during the open, and then manipulate that, then we go higher. So I'm just kind of waiting on that. Let's see here. This is the 5-minute. This is the 15 on ES. Let's go to the 5 on ES. Yeah, honestly. Do we have this is 5-minute also. Okay. I mean, yeah, we've just been we're respecting every swing low we've made. Like 1, 2, this swing low was respected. The series of down candles. This one, even this one. I mean, I would like at least this low to get taken. See, I've actually marked out 9:30 open, but like yeah, you guys, we have to make sure that I definitely don't want to chase this. We have 9:45 news. I don't want to, I just want to see what the news does. I mean, then we'll have some volatility. It's a Monday morning gap up. Okay. I don't really love I don't love those situations because a lot of times what either happens is like, yeah, we do just keep running up higher and I'm just gonna miss it. It's fine. Then I'm literally just gonna wait. Maybe wait in the afternoon. Sometimes you have a setup that's better. And then the other scenario is, we tap into the gap a little bit and then we go. Or we manipulate first, which would be nice, but yeah, I'm not gonna fade a gap up after rollover on a Monday. What do they say? They call it turnaround Tuesday typically. So, and that's kind of funny because like, turnaround Tuesdays, like reversals on Tuesdays. You could have, and then we kind of always look at it a lot of times like Tuesday high of the week or Tuesday low of the week. But Monday, I like to just use mostly to set the range for the week or giving more information here. So the more data you have, the more information, the better, right? I'm gonna just delete some of these. Okay, actually don't need seconds. Yeah. Okay. Perfect. We're just making higher lows. $9:24. We have 6 minutes until the open. What I do want to look at, yeah, wait. Yeah, maybe we come down into this area, take out the 7 a.m. low. At least I want the 7:05 a.m. low, honestly, get taken. Well, we're dropping a little bit before the open. We'll see. Staying hydrated today. Got my electrolytes, you guys. As I always do every morning. I've been drinking those electrolytes. I don't drink coffee in the morning or at all. Honestly, it makes me jittery. And I don't like it. Yeah, I did notice, like I would feel more nervous, more in anticipation before taking a trade. So I can't be drinking caffeine in the morning. Even everyone knows I tried the pumpkin spice chai lattes during October, and I do love them, but cannot be drinking them in the morning before trading. There's better ways to get energy for me, like electrolytes, yeah, working out, etc. 4 minutes until the open. I mean, yeah, like I'm kind of just noting this as trendline liquidity. I'm not really. I would love it to get tagged first, but right now we're you know we're actually bouncing there at the moment for. Kind of like to look at the hourly too. I mean, did we just go? I mean, yeah, we did. We left this gap, and then we have this hour. We have another hourly gap here, like at 56.63. Yeah, let me mark that out. And then let's go in the 15 minutes to see how that like. Yeah, I mean, doesn't even have to get all the way down there. Like honestly, if it just takes this out, it'll be fine. Somewhat. But yeah, we have this just like steep trend line on ES too. So yeah, I mean, no matter what I'm saying is like if it goes up into here, I'm like fine with it. And then I'll just wait until an hourly closure, it's something like that. Like what will tell me basically even especially the 4 hour actually at 10 a.m. I'm gonna check the 4 hour candle to see how that ends up forming, right? Because I noted here earlier this little, I'm not gonna keep it drawn out on my chart, but I have this like because I don't just want too much lipstick on my drawings, right? But I want to see how that closes within this on ES and then on NQ as well. Like ideally it closes above halfway and then we could go up higher. But like if we just wick that on the 4 hour, then maybe I'd look for a little bit more of a retracement to go lower. But gotta stay patient there. Plus, I would just wait for retracements and then just go long again, honestly, because I said I don't want to fade it. NQ is like stronger in that regard. It's almost, I already filled it. I mean, I would love a close above that. We already got closures basically above this 4 hour, daily high. So that's good at least. But yeah, let's check. We got the open right now, you guys. So let's see how this goes. Oops, I want to delete this though. Remove. Okay. See how it goes. We got 9:45 news here. I do like to mark out also like a vertical line with when the news is coming, so I like remember. Honestly, that's why I write things down all the time too. It's like my plan and other things, because why do you want to remember too many things? You only have a certain amount of real estate in your mind. And I'm being serious about that, like you really do. So might as well use that for something else. Okay. So what did I want to do? I want to just draw that trend line. Look, here's the open. Just wanted to draw like that trend line liquidity here. Yeah, I mean, I do prefer us to just drop a bit. This is the whole gap. I mean, this is the gap up from 6 p.m. Honestly, if we go all the way there in the morning, if we could reach here by like 10, I don't know if I want us to go all the way down there. You know what I'm saying? I feel like I'd prefer us to go here. It depends where the market structure shift is gonna happen, right? So I'm gonna be pretty disciplined about that approach. Right? So tiny little drop there. Here in ES, how much did we just drop? Oh, I do want to put the measuring tool back up. About 5 points on ES and NASDAQ. It's 15 points just now. We just dropped. Okay. Little first. We'll see how this ends up going. Honestly, if that was it and we end up going up higher, it would be kind of wild. And show just a lot of strength. Okay, so far it's not. This little gap's holding up. I'm not really touching this right now. We have 9:45 news. And Anthony said that him and Tracy will be back during that time, so that'll be good. What is it today? Flash manufacturing PMI, flash services PMI. Cool. Trump is speaking today. Tentative, it says. For the time, that's fun. You guys, how many times have you like been in the market today or like recently and you get stopped out because it's like a random headline about tariffs? For me, I think it only happened once or twice. I just have this marked out. We took out this tiny pre-market low. We took the 7 a.m. low out on ES. I want to see on the 15. Yeah. So right now we're in this little FEG. See on NQ. Again, I do just prefer to take out some more liquidity, but we'll see how. I think 9:45 will tell us what's going on. Some people might just be like, okay, that's it, that's enough. It dipped into this. And then now they're going to look for a 1 minute shift to go higher. The people that might be like, she's drawing a trend line, dude. It's just to mark out some liquidity, trend line liquidity. Okay. We have news in like 10 minutes. But so far, you know, we had a small drop here at the open, and now it's been entirely taken back so far. On ES and NQ probably. Let's see. On the 1 again. Oh, NQ is a bit weaker in that regard. Okay. Cool. Yeah, it's not interesting, you guys. NQ just made a new low of the session here, and ES is holding up stronger. I did mention I thought that ES was looking stronger earlier, but I mean, we'll have to continue noting this. Wonder what YM's doing. Gotta switch to YM for a minute. The boomer index. Does anyone else call YM the dirty 30? Let me know in the chat. Okay, YM's looking more like ES in that regard. It's hanging out here near the highs of the session. Cool. Switching back to ES. You know why? While NQ is just dripping a bit lower. We'll see. Is this a potential divergence that'll lead us higher later? We'll see. See, it's 9:36. We have news in 9 minutes. Don't get wrecked. Let me see. Literally, you guys, I am not taking a position before like any red folder news during the New York session anymore because I've seen 10 a.m. news that normally just like moves like 40 handles or 20 handles before. Now they're moving like 100-point handles, and they're also doing like double manipulations. I saw a couple of my friends who got stopped out before on that. Yeah, I'm live on NinjaTrader on Mondays, basically 9 to 11 a.m. every week. And also I do Tuesday to Thursday, 9 to 9 to 15 pre-market analysis. So you guys are now getting Tanya 5 days a week. Before I was just streaming really Tuesday to Friday. So now I'm on Ninja on Mondays. ES just, trudging along. Completely took out that down close candle from the first minute of the day. And that FEG inverted it. Well, NQ, it struggled to do that at first. It was wicked it came up higher again, took out this tiny swing high, but also wicked it again. So NQ is pretty erratic sometimes. And made a new low of the session. Now it's making its way uptown. We broke a tiny bit of trendline liquidity there. So if you're thinking that's the enough liquidity to take us higher, like that could be a potential manipulation. That's it, like the right there, that 1 minute candle on ES and this little few minutes down on NQ. It's totally possible. That was quite a ripper here in the last minute here at 9:39. Let's see, that was like 5 points on ES and 23-ish points on NQ. Okay, honestly, kind of smaller ranges than I'm anticipating, which is kind of good. I mean, maybe risk will be better managed today if we're having smaller ranges on a Monday. We'll see. What I'm gonna do, I do like to keep, I'm gonna put the measurement tool back on my drawing tool. So here, drawing tool tile, ruler. Okay. This is the ruler. Cool, cool, cool. Just want to put it on this one too then. We got news in 6 minutes. Okay. kind of interesting here. ES is definitely stronger. And I was saying earlier, like that could have just been it. Some people might think, okay, that's enough. Like broke a little bit of trend line liquidity into this 15-minute FEG. I mean, I actually do like that because it's like, hey, if we dropped too much, then it's like killing the momentum for the upside. If we dropped into all the way down into this gap, then I'd be like, I don't know if we're gonna shift higher like during the AM session. So it's actually not bad at all. This move so far. I'm actually, it's not bad at all. Like we'll see what's up at 9:45, but I would love for this to be the low of the session here, and this as well for NQ. We'll see. If NQ makes another lower low, I mean, I'm gonna think we're kind of cooked with potential high resistance liquidity run conditions or seek and destroy day choppy action, whatever you want to call it. Broadening formation, megaphone, there are a million different words. Just to indicate like, oh, if the indices are like out of sync. That's what I'm saying is like, I would not love for NQ to make another low and be weak while ES is strong. It would be kind of weird for me. Because like, tech stocks do have a large percentage of the S&P. So eventually then the NASDAQ drags ES to then sort of be range bound, which is, I hate it. I hate it when that happens. When NQ is like being weak and making lower lows on the session and like ES is ranging and then YM, the dirty 30s then making new highs consistently. That's a kind of condition I don't love, you guys. So kind of anticipating everything. Like, okay, that might be a situation, we'll see. But ideally, my ideal situation is that we keep that was the low and we're remaining strong towards more upside, But ES, like honestly about to hit those 5,800 level, that 5,800 level. Let's see. Did I delete it? Yeah, I did. Okay. Well, let me go back and redraw that on the daily. Well, we have some time. Yeah, I mean, we didn't hit it yet though. It's little. I do like it. And it's on the weekly as a weekly point of interest too, right? It's shaking out basically, coming back over the March 14th weekly high. That'll be cool. What's up, Anthony? I'm
The dirty 30 is hilarious.
Are you guys laughing
I
over there
never
in the
heard that
studio?
before. I was laughing. I'm like, the dirty 30 is great.
Oh man. Yeah, sorry. Also, I started saying boomer index.
The boomer.
Mhm.
So in just a minute or so, we'll go to Shy for breaking news, everybody. Yeah, until then, yeah, it's kind of what you anticipated, right? I heard you this morning talking about, maybe just a little quick wick lower and then come right back up. And, you kind of called that low as it was happening. Just got to be patient. That's all we could do.
Yeah, sounds good. We have news in 1 minute, you guys. So we'll see what kind of reaction that's going to be. Like I said, I'd prefer us not to drop too much. We'll see. I mean, it would be kind
all
of
right.
okay
I'm gonna bring in Shy right now, give everyone a quick preview, and we'll be right back to Tanya as the breaking news comes out, and we'll see what shakes. So, Shy, what are we anticipating for this number? What's expectations here?
Yep. So we have S&P Global Manufacturing PMI, which is a survey of purchasing. I can't talk today. Purchasing managers in the manufacturing sector. Forecast is 51.9, and then the S&P Global Services PMI, which is 51.2. Improving conditions would be, we want to see a number higher than what is forecast, would signal improving conditions, whereas below would be weakening conditions. 50 is where kind of the expansion is. And so you definitely don't want to see it drop below 50. That means we're kind of in a contractionary situation, which would signal slowing of the economy.
Got it.
And
You've seen already reactions to it. Is this the number that is held at 45 to come out at 47? So I think the number is already out for those that subscribed to it earlier, if I'm not mistaken. I think that's ultimately what happens. I mean, we're not seeing much on the tape, but you did see an initial reaction.
Yeah, so composite is 53.5. Services is, 54.3. And manufacturing is down 48.8. So we're seeing contraction in the manufacturing sector, and services very strong still.
Got it. Yeah, and reactions somewhat muted, make a new high in ES and then starting to tick back down. Thank you, Shai. I appreciate that. Let's go back to Tanya. Tanya, back to you.
Awesome. Yep. So yeah, we just we wicked higher there, made a new high in the session on both ES and NQ. I mean, it looks fine. Like I said, I'd prefer that if this was like the low of the morning. So we'll end up seeing if we end up tapping this higher on NQ into this volume of balance above. And now we're making a new high again on the session. Let's see from here to here. Just like to measure some fibs. Yeah, we retraced the 50% before. Okay. Cool. I mean, here, you guys, it's just super hard for me to get long right now because it's just there's no FEG here. All I can think about, right, is like, oh yeah, we had a 15-minute pullback into this area, and then you had a 1-minute structure shift, but no retracement to 50% for me to get involved there on ES. And NQ, that happened before the news, the retracement. Well, maybe it happened even during. I don't know, it happened like right here. Okay. Yeah, during the news. So what I'm going to do is probably just draw 50% from here to here. And honestly, that's probably my best bet. It's like, yeah, if it retraces there before going higher. We have also the 4-hour candle is closing in about 12 minutes. Okay, perfect. Cool. Someone asked me, like, what is my fib template? So honestly, I'll pull it up for you because I'm about to change it. Yeah, and then I like to add like negative 100 just for the extensions because I just want it to be in one tool. And then honestly, negative 250. I like the negative 2.5 extension. And then you could just save that as default. So there we are. Yeah. But as this like the black, midpoint, as this like just trudges up higher, I'm not really gonna feel much FOMO, like I said. Because the thing is, where am I gonna put my stop here? Like, I don't think that this is like a liquidity low because this is in a premium, right? of this leg. It's just a swing low, so like it could potentially, I wouldn't feel comfortable putting my stop there. So then my point is that the RR is like negative. Yeah. Pretty wait, well, what's the range here for NQ so far? Like around like an 80 point range for the morning so far. Still the beginning of the day. But yeah, honestly, I'd like it to come down into 50%. I mean, yes. Let's see on the 5 minute. How do we look like on the 5? Yeah, we have 5 minute FEG here. You know, this is a breaker. We made a lower low here. Like took out some liquidity into that 15 minute, some trend line liquidity. Then we broke this high with fair value gap. I mean, ideally, yeah, we come back down into here and then I can take it higher. And I'd rather just do ES because it's the stronger index right now. And I don't want to chase. Don't need a chase, dude. What's the okay? Yeah, the 4 hour and the hourly are about to close soon. In about 8 minutes. I'm just redrawing the fib as it's heading higher because then there's a new swing high. You guys, we got 7 minutes until the end of this hourly candle on NQ. Honestly, it's a pretty strong candle here. I mean, you have this tiny little gap here and just like retraced into that. Like I said, I drew out that trend line liquidity, just took it out, just this tiniest manipulation, which is looking really good for more upside then, right? Because then it's like, okay, I didn't retrace enough to really take out the momentum to the upside. And now we're having a strong close. Yeah, I mean, at the 9:45 news took us back up here to the new highs of the day, and now we're just looking pretty strong. Let's go back to the 1 on NQ. Right, I'll remove this as the previous, that like little trend line liquidity I was talking about. And then, you know, retrace the 50, definitely 50% here, just and respected this. I said I'd rather it keep this low in, it did. So it's looking great. The only issue is, you know, it's not really giving me such a good clean structure for a retracement. Kind of just like flipping through the time frames now. I mean, probably on the 5 you could maybe get something. Here's a 3 minute. From here to here. Yeah. This is 50%. So yeah, you have like a 3-minute FEG there that would be supported by, these down close candles. You have an order block, and it did take out some liquidity, so you have a breaker block. I mean, there's a bunch of, honestly, if we did retrace to here, I'd probably try to buy that. Yeah. If we don't hit this area yet. The 3 minutes quite clean. Yeah, same thing. Like this is the area of interest then. I'm gonna just take off the fib because now I know. Because like if we make a new high, then this is still in discount. Okay. These like since 9:45, we've just been back and forth here, these candles. It's very small bodied candles here. I mean, yeah, tough for me to get involved because there's no retracement to here. Just gotta wait. Typically small body candles precede large ones. So either we're gonna get the retracement I want and I'll buy, or it's just gonna go moon to the upside, which is fine. I'm fine with either one. We do have the 10 a.m. candle open happening in about 3 minutes. Are we gonna get the retracement I want? That's the question. That is the question. Basically what I do is like I will chart on the mini, like I'll chart on NQ and ES, and then I'll take my positions on the micros. So we'll end up seeing if I get my point of interest here, I'll just pull up the micro chart to the left also. you want to look at the 5 for a second, because now we have quite the push up there. Okay, this would not be in a premium. So I'd wait for a deeper little retracement, maybe to 50% of that, of this little fair value gap. Should be like 90s, which is where I have my fill. Like if you just put in your fill here, it's like a 1-to-1 R. But like I said, I mean, I'd rather it come into like 50%. I put my fill in like the 90s. Also in the 3-minute here. Let's see. It is a little bit lower there. Yeah. Did not get filled yet. We'll see. Guys, I'm ready to get filled if it does come back down lower. Yeah, this is below 50. This is right at 50%. This is like these, also the top of these down close candles. So, and I'd be shooting for up here. So we'll see. What is this? This is a 5-minute here. I'll put it up on the 1. I kind of like that it's sort of consolidating. Maybe it, does a little manipulation lower, and then I get filled on that manipulation, That'd be nice. I really do. I like this area, so. We have like these order block and breaker block and fair value gap. Like I have to try it. It's like when I say to myself like, oh, I have to try the trade, then that's a good sign for me. I like force myself to take it, yeah, because I have to try it, let the probabilities play out. If I get filled, that is. So it's just a waiting game. It's good. I'm happy because like I didn't chase. Like people that already been chasing, they're not up or down at all. So see if I get filled. Yeah, I'd hold until I'd partial some here and then, take more off there. Midpoint of this probably. Could probably take like a standard. We'll see after I get filled. I'll take a standard deviation of the move lower. I'll take the extension is what I mean. Oh, I put this fib. I just wanted to know the 50%, but I did draw this fib the wrong way. 'Cause it should be this way, but it doesn't matter. Do want to see here. Just remove this for the moment. Let's see if I get filled, you guys. It's teasing us. It's teasing us. Here. It's teasing me for real. By like a point. Here I'm filled, you guys. So yeah, 65s I'd put. So I'm filled 10 MNQ. We'll see. So far we'll see how this goes, how long I stay in drawdown, etc. Obviously, ideally I don't stay in drawdown for too long. I think this would be good as the manipulation to go higher. So ideally, that's a sniper entry. So we'll see. So far it's good. See here, fib. So far it's pretty good. We'll see. I'm happy. I'm pretty patient today. We'll see how this 5-minute candle closes. So far I'm in drawdown for like 1 minute, about 10-point drawdown. So far, that was a pretty good entry. I do like that wick here. So we'll see how that goes. Okay. Honestly, there's nothing to do. Got filled. I'm very happy. So with not chasing price, now we just let it play out. I do want basically my target's up here. So we'll put that up at least actually in a second. There's no rush though. I'll take off probably if most or half or something like that. So far it's good. Like I said, I was in drawdown for exactly 1 minute. I'm just noting that. Like that's a pretty good entry, you know? All I did was draw a fib. That's it. So I don't chase. There we go. That's better. Save. Okay. Just wanted the fib to be better here. I've been trying to, yeah, there we go. So far, you guys, I got a good entry. I mean, once it takes a new high of day, I'll put my stop below this swing low. I'm not gonna put break even, but once it hits my target, then I'll probably put break even on the rest. So I'm pretty happy so far. Patience is the name of the game, you know? Patience. Cool. Yeah, negative 250 and 200. Let's see if that lines up with anything. In the 4 hour. In the daily. I like the negative 200. It's like it comes to this, like the low of this body candle. Obviously, I'm going to take most of it off when it reaches that little void I marked out earlier. So far, so good, you know, up 34 points. One minute of drawdown. It's been a pretty chill trade here. It's 10:15. Like I wanted to see actually the 60-minute. You know, it's actually pretty good, you know. If we're continued bullish, I got in near the low of that wick on the new hourly candle, right? Because I got in at like yeah, 10:10, and it's in the first 15 minutes, which like I said, I want to be a manipulation. And now what I'm gonna definitely check out here is like this little FEG, the 1 minute. Gonna put my drawing tool here too. But yeah, chill trade so far. Yep, cool. And on the 4-hour, same thing, you know. Decent entry then, you know. There's no reason to feel any kind of way, worried or anything. Actually, here even have like an upper FEG here, respected as well. So it's like super looking cool. It's very strong, very strong. Yeah. Let's see ES at the same time. I think it's behind here. ES making new high of the day. We're looking good. Oh yeah, and I want to put my okay. Even if it just gets to 64.50, that's really good. That'd be like 70 points. That's what I said. I'll take most off. I'll probably take like 6 off there. Like 66, 366. That area, 365. Yeah. I'm gonna take a sip of my water. There's really yeah, I'm chilling. I've been in this trade for very little time. How many minutes, right? That's what I like to note also, right? It's 9 minutes. I've only been this trade for 9 minutes, and this whole time I've been basically in profit except for 1 minute. And typically my trades, they take like 15 to 20 minutes. And it's a Monday, it might take longer. So I'm just gonna stay patient. I'm not impatient. You should be patient when you're in profit, and you should be impatient when you're in a bad trade or you're in drawdown. Like I think most people fail because they do the opposite. They're like very patient when they're in drawdown and they're like, oh, I'll wait it out more, or like I'll average down, whatever. And then they're like they see a little bit of green and they'll just, I gotta take that, gotta take it. So this is a day where I think it did and start doing exactly what I wanted it to do, right? It's like, okay, I want a 930 manipulation, and we did. We just did a tiny one. I said I wanted this to stay intact, and it did. And then so I just drew a fib after the 945 news from this low, which completely filled in this gap in this BPR balanced price range. That's why I feel more comfortable putting my stop here. I felt comfortable putting my stop there. And then I just drew a fib and that was my entry. And now, I got filled in here, right? 91. And I had this marked down the 5. I said I wanted it to wick it, and it did, or the 3. The 3 is probably better here. I think it's cleaner. Yeah, wicked it on the 3. So I'm just chilling here. As we make like new high of day or like displace above that, then I'll move my stop up to the last swing low. Because I do like that this low completely filled in that gap on the 3, right? I do like that. That's why I feel comfortable moving that stop up as well. And now we're probably going to start extending higher now. I'd want to see large up close candles, large green candles incoming. That was magic, right? That was cool. New high of day on NQ there. Let's see. Continuation. Yeah, put stop now is like just down to here. So now it's only a 20-point stop. I'm in about 40-point profit. So dynamically, it's like, yeah, I should probably take a partial, right? But I'm gonna give this like another minute. I'll see what the next candle does. See, what is ES doing? ES just is in my target area, that void. So let's see if I want to see more pushing up now. More upside. We'll see. Now I'm in the trade for about how long? 13 minutes. Cool. Okay, I'm seeing this next candle form and it's still within this range and it still looks quite bullish. So just chilling. I mean, I could take a partial because ES hit my target. Maybe I will in a second. We'll see how this candle goes. See the 3, because I don't really love that we wicked above the new high of day. Then we can retrace and it's just gonna make it easier for me to hold. We'll see, because I'm up 41 points. And I did move my stop. Basically, we'll see now. I'm watching this candle. Take me higher. Come on, it's the final countdown, you guys. You guys know that song, of course. It's like 1 billion views on YouTube. And 23. Yeah, it's time for me to partial. I'm waiting until this candle close. Sorry, I'm waiting. 1023. I'll see a 1024. If this candle closes above the previous one, I'll hold and I won't partial. Okay, I did. Okay, I want to see more upside now. Large candles to the upside. If I see a displacement now, I'm putting stop break even. I mean, I probably will end up doing it anyway. But it's the final countdown, you guys. What is that? Oh, that's my crosshair. Anyway. Let's see it. Come on, NQ. To give it some encouragement. What's ES doing? Probably chilling. Yeah, it's chilling. Yeah. I don't like that it wicked that. Yeah, I'm gonna force myself to take partials here. Okay. I locked in 4 at like plus 40-ish. Yeah, 4 points or so. Anyway, now I feel chiller. I'm gonna then also like still want to hold some runners as we head up higher there. And we love that. Now I feel better and more patient. I mean, this is the thing. This wick, I wanted to see it really start displacing the upside. And then this candle pulled back, and I'm like, okay, I'd rather take some partial here and pay myself. You know, this is my next stop. This little swing the swing low here. I need more water. but I mean, you could probably put it up to like 50% of that. Because the thing is, I don't want to really hold this if it comes all the way back down here again, you know? 50% of this is decent, right? Where did three PD arrays fail now? So we have like, it's like I'm looking at I entered on the 3, right? So I kind of want to continue managing it on the 3. This is a BPR, FEG, and a swing low. So I'm holding this, yeah, for this low. This is my stop, yeah. I'm holding it until, I think, you know, as long as I'm patient, I think this could be really continue up higher later into the day as well. So it's the start of a trend day, you know, don't want to be too impatient. Oh, I took a partial at 40 something points, 43 or something. And, you know, the rest of my stop is like 20 points or less. Yeah, like 18 points. So now it's like, yeah, literally if it stops me out, it's a free trade anyway. But unlikely for that to happen. So we can have this on the 5. Let's see, on the 15. 15 looks good. 15, it closes in 3 minutes. I really would love it for it to close above 39s. Yeah. Because it's just annoying if it wicks a high and then it could retrace again and then it could come back here again. I'd rather see continuation to the upside now. But anyway, so far, like I said, I was noting if I would get a sniper entry, and I did pretty well with that, right? It was just draw down for like 1 minute. All I did was draw fib straight up, so I wasn't chasing up here. And I was looking for a retracement back into an FEG anywhere, like so on any time frame essentially, and I found one on the 3. There was also one on the 5, you know. So entered there, put stop here because that, yeah, that's the swing low. And yeah, we're making our way uptown, people. Making my way uptown. Walking fast, faces pass, and we're homebound. 406. I wonder if like NinjaTrader Studio is like laughing at me right now, probably. But like that's kind of what you get when you watch me stream. You're gonna get like these random hummings as we're waiting for more price action, right? So I mean, I'm pretty happy with this. No matter what happens right now, it's a free trade because I took partial and 4 at 40, and then you know I'm if I get stopped, I'd be like slightly green or something like that. I'm just thinking of my risk dynamically. I know some people don't do it the same, but you know, if we make a new high in the session, I'm gonna pull my stop up. I wanted more rippers here, and we just had like a wick there, and then during this pullback, I was like, all right, I'd rather take a partial here because if I see like a deeper trace mode, it's gonna make it really difficult to hold on. I'd feel kind of annoyed. I'd want to pay myself for my time and my good entry with the minimum. So let's see on the 15, we just closed. They closed like right at the 39 level, right above it. So it's decent. We did close above it, so that's cool. We're having a little pullback to 50% of this body. It's looking good. That's a nice. Yeah, ideally now, you know, that's like the first minute of this 15-minute candle. Ideally, we just hang out here and we go higher. Can take me higher. It's a Monday too. Honestly, this is pretty clean action for a Monday, not gonna lie. It's like honestly, most of what I did was focus on the higher time frames. This is what I said. this is based on the 3 and the 5 minute, like my entry. So it's likely going to take longer for it to play out. Longer than like a 1 minute would, right? And also, like it's just honestly, the structure was cleaner. And like, honestly, if you can go higher in time frame and do that. It's just easier, especially on like a Monday. Because like, yeah, the 1 minute was, yeah, you see the 2 minute here, it's just wicked back and forth. There's no FEG there. And then there's a tiny one here earlier before the news, right before the news. And that's what I was noting that in my head. Probably, I wonder if the 1 minute has a wick, has a FEG there. I think we have 2 of them actually, that were stacked. And that's when I actually do like to look at a slightly higher time frame if we have 2 stacked. Yeah, you see like 2 of them are stacked here, then I'd go to the 2 minute because then it's just one, it's cleaner structure. But I mean, that's what I was really noting this before the news. Like, I want this low to stay intact. And I was looking at this as well, and we held this pretty well. We had a new high in the day. We only wicked it. Oh, here we are. We're going higher. I'm trying to just review the trade in the meantime as we're waiting, because like people always ask like, why did you go long? What was your right trade idea? It's that. And basically, I mean, price action's been doing what I've been wanting it to do. I mean, I said like pretty much it only happens like 30% of the time anyway. Like, it does exactly like how, like, okay, yeah, for example, at the 5 minute, the 3 minute, when I was in my entry, I said, oh yeah, I want this to wick. Did that too. So I'm sick, pretty sick. New high day. It didn't do where I said I wanted it to displace higher quicker now, like rocket ship. So maybe it's not, but it's good enough for jazz, like I like to say. Don't love that we wicked the high again there. So like we can retrace again into this. We can take out maybe the swing low. We have some trend line liquidity. My stop is here though, so I'm chilling. I'm not gonna be worried if I get like a big retracement. Like, sometimes in this market, you get these like nasty wicks. So this is where it's making it just easier for me to hold, because I did take a partial near the high, like previous high day, like pretty much around there. Now we're chilling. We'll see this pull back. We have BPR here on the 3. Ideally it does just wick through there, and maybe it might be scary, but ideally, it wicks through there. Like, so basically where I took a partial, it's 1 hour or so, because I entered at 50% of retracement and I exited near high day, right? So, but the thing is, when I moved my stop up, it made it dynamic risk. So now I was only risking like 20 points on that, and I was up 40. So then I'll take some off the table. And again, it makes it just easier to manage. Especially it's like a Monday. Just looking at different time frames here on the 2 minute, we have a BPR also. Yeah, so it's chill. I'm just going to continue watching this on the 3 on NASDAQ then on the right, and we'll have micro NASDAQ on the left where I have my entry. Well, honestly, it looks good. So you have a closed above new high day. Even on the 15 it did too, and it left a FEG and a BPR, and like it looks good to me. So this is where I would not be fading this like little 1 minute. It's against higher time frame order flow. Okay, if you're like, if someone is just shorting this, that's more of like, I'd question them as what's your point of interest? Like that's just pattern trading, in my opinion. So, came in with a narrative for more upside. Said only longs today, so I'm just kind of reviewing the meantime right now. I said I'm only doing longs. I got in. I said I'm not chasing. Got in. Basically only draw down for 1 minute. You could probably I could probably put my stop up more to like 50% of this little wick. Like, but I'm kind of just want to give it breathing room in the sense that like, yeah, this is the swing low, the intermediate term low that completely filled this in, so that should not get broken. I think there is more upside, into the week, and I don't want to choke my stop up. I took my partial, and that's good enough. So I'd love to see here, like, closures above new highs. I would love to see like us just displace above this wick. I mean, then I'd think more upside. Okay, we just have that tiny inversion, but which is good, right? It's showing that there's literally only bullish order flows being followed. Like even this 1 minute couldn't hold that up. So I'm chill. Let's see on the 15, on the 60 minute. I mean, 60, yeah, 60 minute. Yeah, we're chilling. The 4 hour. What was the high here? 53. Okay. On the daily. Mm-mm-mm. Did we hit 46? Yeah, we did. Okay, cool. On the 5, we just left this tiny little FEG here and we wicked it too. So it looks good. Actually looking good too. I don't even think that retraced to 50%, but yeah, that looks good. As we're like getting towards 11, I might end up taking another partial or something, but we'll see. So far, I'm in this trade since 10:09. Ideally, I want this wick to get taken out. New highs of day to be made. CES here. That's retracing. Okay. See, did we even come back into the BPR yet on the 3? No, we didn't even come back into this area yet. Here's my little, yeah. I don't need this anymore. So that was the news candle or like the open. Don't need this fib either anymore, honestly. Like 400s would be my target, honestly. Like, yeah, let me just drop. Let me pull this up to see what 50% of that like little about where that is. Yeah, 400s. That's probably where I'd take the rest off. Like, how much should we move today so far, you guys? I want to measure this. I don't think we moved too much. 121 points only during the New York session. How much should we move like since the gap up? Let's put that up on like the 15 or the 5 so I can easily measure that. Yeah, 300. So there's more upside. It's like if the average true range has been like 400, 450. That's why I'm like chilling. I'm not like I said, I'm not getting worried about that. Just a little more accumulation. Like, no matter what happens in this trade, I'm happy with how it ends. Okay. Indicators. ATR. Just want to make sure. Let me save that. You can save it as a default here. So I always okay. 457. Yeah. Honestly, let me put a black line. Okay. But that's why I feel comfortable holding for more upside because we only moved through, we had that gap up, but we only moved 300 points still. Like we have 150, like 50 points left in the range. I feel comfortable holding for another 40-ish points more from here, like 300 like and more to here. Yeah. Where's my stop at? 273. Okay. That's better. Maybe sometimes my drawings aren't the best, but it's fine. Okay. Like all in all, I'm holding in near the highs of the day on NQ. Yeah, we tapped into it a tiny bit here, I guess. So honestly, I'm kind of just gonna, I don't want to limit my upside on here, since we came pretty close to that, and I do think we go higher. That's what I'm sort of thinking about. It's like I'll take a partial once we start coming back above this wick. I'll do that then. Like I don't want it because that could potentially be higher than where I had it at 65, and I want to catch more of that move then. And then the rest I'd put at like 384 or something like that, or like actually the negative 200 from here to here, right? That's what I was looking at. right? I feel like I might have messed up my fib settings earlier, but whatever. I remember it was 400 or something. I keep putting it the wrong way. This is funny. Okay. Maybe because I put negative 100 as 200 or whatever. It doesn't matter. Point is, I've been in profit like this entire time, so pretty good. We're about to make new highs on the day, I think, again. I mean, I would love it if we stop wicking and reversing, but I would love to see more displacements to the upside. But you have to be careful because, yeah, you know, if you look at the daily, we're near at the top of the end of the range. All in that, like I don't feel like I was chasing or anything, so I'm pretty happy with this. Okay. Oh, this is why, you guys. I put extensions this whole time. I thought it was on retracements. Yeah, that's what I did wrong. Okay, that's my fault. That's why it was confusing me. Okay. Anyway, we're going near the high of the day. It's chill. We're chilling. The final countdown. New high of day. Dude, let's see us like, can we like go? Like I said, I'm gonna be taking more partials here, so I'm getting ready to do that. Boom, bum, 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 bum. Hit the like button. 1,100 people watching this. Sick. Very sick. Okay. Very nice. We're getting displacements back up to the upside, yeah. I'm up 63 points. Like I said, I'd take a partial here again. See this candle here? We had an FEG here. A little FEG to draw out near the highs, which I really like. So now where do like 3P arrays fail? This is on the 3. I entered on the 3. You know, now I could definitely put my stop break even and be like 1, 2, 3. Like, yeah. My stops definitely break even now. And with that, I'm gonna take the partial I promised I'd take in a second. Yeah, took the partial there. So I only have a tiny bit left in my position. Most of my position is off at this moment, like locked in like 60 something points there. Then stop break even on the rest. Yeah, one. What's a PD array when I talk about that? Like where do 3 PD arrays fail? Because that's typically what people start asking me. So I look at swing highs, swing lows, and fair value gaps, order blocks, breaker blocks. So those like each of those is one PD array. So I look at the 3-minute and I'm like, okay, yeah, like if we that's a swing low, that's one that would be broken if we came back lower because I'm looking where to trail my stop, right? That'd be one. This FEG here, this tiny little gap, 2, and then this BPR is 3. So, and my entry is below that. So that's why my stops break even now. And I'm just gonna chill in the rest. I have to be careful about the rest of the take profit here. But hey, it's a green day. Really good. You know, gap up, patience, waited after news, like everything followed the script pretty well, I would say. I like this like midpoint area. Like I kind of like I'm putting it at 399 in the rest because like I feel like that's 400s is a psych level. That's basically it. Looking at the midpoint of that like volume gap is 380s. It's kind of just this now. I'm sort of letting it do what it wants to do because I do think it's been a trend day. So I'm kind of just how would I say? Just can't even think of the word right now. Trailing my stops, yeah. But yeah, pretty good. And we could literally get to 480s. But let me think about this though. We're up like 310 points or something, right? But from the gap down, I'm not counting that. I'm counting how much we moved. So that's what I'm looking at ATR. Let's measure that. Yeah, okay. Yeah, there's like 150. So what's ES doing? We're making new highs. Yeah, it's chilling. Chilling like a villain. Well, it's 10:54, you guys. Like, copped a W here. Type a W in the chat. Let me know if you guys were long too. I mean, most of the chat was bullish, so pretty good. It wasn't such a tricky day. It was a pretty straightforward day for a Monday. I'm pretty happy. Locked in, 80% of my position. Now I'm kind of just trailing because the reason behind why is kind of like, I want to trail because I don't want to choke my potential upside in that sense. I mean, I could just actually, what I'd probably do to trail is, since, now it's kind of like, oh yeah, I've run out of that. Because it did hit my targets essentially. Maybe I had like 65s or something, but I said I'd just kind of look as it goes through this. It did have a nice green candle. I got out, took that partial there. But I'm trailing on the 3. Actually, where the 3 PD array is failing, you have this series of down close candles here that were broken with a fair value gap. That's one, that's an order block, right? You have this fair value gap and then you have this swing low. So actually I'm just gonna trail it to this swing low now, 314. No matter what, you're locking in profit. I'm locking in profit now on the rest of the trade. And I already locked in profit earlier, so it's chilling. Yeah. What did I say? 3. Yeah, 314-ish. Because yeah, I don't want to cut my winners, but most of the position is off, so it's just like a core. Runners. So sick, pretty happy. Like, I was here. You all saw the limit fill here. Just reviewing the trade. Down close and then just 1 minute in drawdown. Was pretty chill the entire time, and then partial near the high of the day, and then another partial here. And yeah, we caught like an average of 50 points on NQ there because it was 40 and 60, I think. Yeah. And the rest, I'm just trailing because, like I said, it is a trend day. I mean, we're respecting all these lows that we're putting in. We're making higher highs. So I don't want to, like, in case we just keep going, I just want to continue trailing on the rest. I don't want to, yeah. Let's see the chat. Put W's, yeah. Woo! It's not money gun day because it's honestly we keep that for the bangers. Like we're pretty strict over here with the money gun days. Okay, when I bring out the money gun, it's like banger day, like 100+ points on NQ, and these days it's like 200. I'm just kind of strict about that in the sense of I want it to be special. But yeah, am I using volume charts? No, I don't do that. What's my typical trade setup and profit to loss? Like when I'm first setting it up, I'd want it to be at least 1.5. So I think here I was like risking, it was like 1.4, 1.5 when I was my first stop and my take profit. And then after that, it's a bit dynamic when I move my stop up, right? Because that's basically the most risk you're putting on in a trade. It's like the first buy-in, right? Yeah. Let's see. Yeah, W's in the chat. Pew, pew, pew. That's funny. Tanya, did you move your limit high? I thought it was at the 360s. It was like, yeah, I did. That's why most of my position's off. It wasn't the 360s. But just keeping 2 micros on the rest of my position to hold because we're just trending higher. And I'd rather, like I said, like, yeah, if this is just like a one and done trade, yeah, like be out, but I think I'm happy with trailing. Because this could potentially go 200 points up, So I don't want to cut the rest at 50 and then potentially maybe my runners go up higher, So, but I think I'll just continue trailing on swing lows, or what you can do is just put at the bottom of a FEG or something. But
So Tanya,
hi, Jen.
that was it was a great trade, no doubt about it. Fantastic trade.
Thank you. Yeah, I'm happy because like last week was a little bit tougher, so this week is already to a good start. So we're chilling.
Yeah. That's awesome. So I'm learning all sorts of stuff. Now keep in mind, I'm a boomer, so I'm learning all this new nomenclature from you.
Yeah.
And I just have one question. When you said, oh, there's 1,100 people in the chat, that is sick. That means good. That means good, right?
Yeah, it does. I say sick a lot recently. I don't know. It's fun. So.
Man, oh man. Well, that's awesome. So great trade. We're gonna bring in Shai next for our hot commodities report, and we have some hot commodities to talk about. So we're gonna get her in here right now. And thank you, Tanya.
Thank you. Bye, guys.
Hey, Jim, how you doing?
Tracy, I'm doing pretty good. How about yourself?
Let's talk some hot commodities.
Let's do
I
it.
wanted to talk about crude first because it's breaking out of your sandwich.
Oh no, my hamburger bun, you mean?
Yes.
What's going on with crude? I have an intraday chart up.
All right. Well, so we got a little bit stronger move we saw those 65s bought again because, again, that is 65 is break even for shale. Some basins more, some basins less, but that's why we've kind of been consistently seeing buying every time we get down into this area. We've got a little bit of bullishness on tariffs might not be as stringent or as wide-ranging as we initially thought, although the White House did say that there was a statement this morning afterwards that said they don't have a plan exactly yet, but supposedly they're going to be less stringent. And Trump just announced sanctions on Venezuela, and it's 25% on oil and gas from Venezuela, and it's not just to the United States. In fact, it's purchases from any country that buys from Venezuela will have to pay a 25% tariff to the United States. Now, China is their largest buyer, and they don't recognize unilateral sanctions. So I'm not sure you'll actually see China pay that, but it is providing some buoyancy for crude today.
Wow. Yeah. I mean, we broke out of that hamburger bun big time right now, and we're trading actually between the 21 and the 50 EMA, which is a strong sign right now. This is a pretty dominant bullish candle so far. We're approaching the 50% retracement today. Just taking a peek at the 30-minute candle, the intraday chart. We're right up against that call resistance though, and we're just banging against it. We can't really make any more momentum up to R2 or to the JX2 level, trading at around 69.01 right now. The ATR, let me make sure my ATR adjustment is correct. The ATR is $1.59. We're at $1.16 so far, high to low on the session. So there is definitely room on the upside to get to that JX2. And the Q score from Menthor Q is pretty positive, and it's bullish options activity of 5 out of 5, volatility neutral 3, momentum very high 5 out of 5, and a positive gamma scenario. So yeah, I mean, more upside is very potential here.
Well, I know the oil bulls on my X feed will love that. Let's move over to copper, another mover we talked a little bit about this morning.
All right, I put a weekly up, Tracy. I'm sorry, I did interrupt. I put a weekly up just to show this double top from May 2024. Go ahead.
Yep, exactly. We're butting up against that area. We're still holding over $5. Still looks bullish. We've been talking about this. We talked about this last week too. I mean, it looks pretty bullish. I mean, it is getting a little bit oversold or overbought. Sorry. So, we could see a pullback in this area. We did have one of the largest copper traders come out very bullish today and say, and this is at the top of the range, right? So he's expecting a much larger move. So we'll see what happens. In the meantime, for traders, I think it's best to, I don't know if I'd be chasing it up here, but I definitely think it's buyable on some pullbacks.
It totally makes sense. Today's kind of, we're kind of back to where we started today on an intraday chart. We have some significant put support down around 5.11, and then that the big gamma level is at 5.10. So we're actually trying to get there. We have a really nice. I added a kind of almost like a double bottom, right? I put a little rectangle there as a pretty important area of support. But again, from an ATR point of view, we have we have some room to grow, right? The ATR right now is 11.5. We've moved 920 so far. So there's definitely room to go on the downside. And the pivot is way down here as well. This is looking a little bit bearish today in this extremely bullish market.
Yeah, absolutely. I mean, like I said, I think we haven't really seen huge pullbacks in this market either, kind of like gold. But I still think it has potential to the upside, just given the fundamental factors behind it and, supply demand. Look at the daily chart. I mean, that doesn't really exactly look like a chart you really want to short. But again, I wouldn't chase it up here. And
Yeah,
then
no,
let's move over to, go ahead.
no, I just saying this has, look for dips before you get in. Just kind of exactly what Tanya just did.
Exactly. So let's move over to gold. So we've seen quite the pullback from those highs from that 3065 to high, which is good. I like to see, I think this market still looks bullish overall, but I like to see some pullbacks because this hasn't really given a lot of room to the downside this entire way up from like 2100 to over 3000.
Yeah, another incredible run here. You're absolutely right. I mean, we're right at that 8 EMA right now. We're just sitting on it. This is the second day in a row where we're just kind of pausing there. Nice 38.1% retracement possible here. But again, I think this is a case of looking for places to buy dips.
Yeah, exactly. I'd love to see it pull back to your breakout triangle or rectangle area for a retest for a move higher. But I think also some of this tariff worry is also affecting kind of sentiment in this market. If tariffs aren't going to be as bad, we're not rushing to buy gold. But again, it sounds like the White House doesn't really know their entire plan right now, according to the statements that are coming out on the wires. So anything could happen, guys. Anything could happen April 2nd. Never know. Let's move over to the silver market.
Tracy, while I'm moving my chart over to silver, real quick question, and I don't know the answer to this, and I don't know if there is an answer to this, but why is April 2nd for the date for tariffs? Is there like a statutory reason, or is just kind of a target that the administration decided to use?
It's just a target that the administration decided to use. So I don't know why it's not the beginning, April 1st, the beginning of the quarter. Maybe they did April 2nd because they think people would think it was an April Fool's joke. I don't know. But it's at the beginning of the quarter, so let's go with that.
Okay, sounds good.
I don't know. All right, so let's move over to the silver market. Now, silver's looking good, a little bit down today. We were up in the overnight. Again, I think this is kind of responding to that tariff narrative as well. Still, fundamentally speaking, this market is in a huge supply deficit, and so I would be looking to buy, kind of rather than to sell. What are you seeing on the charts over there?
Yeah, so I mean, on the daily chart, we're kind of right between that 21 EMA and the 8 EMA, trading south of the 38.1% retracement. So all things withstanding, that's kind of interesting. 50% retracement, we tagged it yesterday. Buyers came back in and brought us back up. So right now, all I'm seeing is kind of a textbook retracement. Most likely, no, I could be wrong, but most likely we're going to resume our upward trajectory after this kind of retracement plays itself out.
Yeah, I think it's interesting, if we look at a long-term chart, that 35 is still sticky. And I feel like if we move in that direction again, I think that there are going to be a lot of stops up there that possibly could get run, and we could get a little squeezy. But let's see if we make a run for it again. And then we'll go to platinum because we're getting to an interesting area in this pullback. Right? So I love this market. I like to buy this market like around 900 if you can get it, maybe, or a hair under, for a next move up. I mean, if you look at this market on like a weekly chart, and again, this is another metal that is in a supply deficit, but if you look at like a weekly chart, we've been consolidating for months and months and months and months. And so I think the next move will be pretty explosive, either to the downside or to the upside. I still lean bullish on this market, however. I could be
Okay,
wrong.
so yeah, so right, I'm looking at a weekly right now, and I mean the candles look really big to me, but I'm just not an expert in this market. But we definitely have some support, possible double bottom, maybe even a triple bottom brewing around 918, and I extended that range all the way down to your 900 level, so that looks legit. We do have a couple moving averages there that are kind of tangled in love, but that doesn't mean anything. Just kind of moving back to a daily chart. I really like this area of support we're sitting on right now. We saw these lows tested on early March, 1, 2, 3, 4, 5, 6, 7 days in a row, and buyers came back in and brought us up. We're at that level again right now. This could just be a regular short-term double bottom, but a breakthrough to the downside here then, in my mind, would be significant. We're also kind of, I have a little baby fib up here. I just measured the rally low to high, just that short-term bump up, and we're
Mhm.
south of that 61.8%, which is a little bit of a warning sign. So we'll see if the support holds.
Yeah, I think again, I kind of still like this to the upside. I think that if we don't see a slowdown globally in the economy, I think we're going to get a boost from some of these industrial metals. And I know platinum is considered a precious metal, but really its industrial purposes are much wider than their store of value purposes. I would let's put it that way.
Yeah, and my guess is, and I defer to you, but April 2nd could stir things up a little bit here.
Absolutely, because we still don't know exactly. Trump came out or has it came out yesterday, yes, and basically said it's not every country. It's only countries that are being unfair to us. So, we went from broad-based, it's every country, to now, well, maybe some countries won't get tariffs. And so if we're looking at specifically mining regions, that would be something you would want to look at when you're kind of trading this, if you're looking at a macro view. So we'll find out. The administration seems like they want to keep us kind of at the edge of our seats over this.
All right, all right. Where do you want to go next? Silver, maybe?
So we just said silver. So I think we're good.
Oh, that's right.
We did 5 today. So that looks good. And I know you guys need to move on to the next segment. So thanks again. I'll see you tomorrow for Hot Commodities. And we're going to cover a couple of markets we haven't covered yet in the Hot Commodities.
Appreciate you, Tracy. Thank you so much. Yeah, we're going to just jump right into the midday markets. We have an awful lot of stuff to talk about today. And I just wanted to talk a little bit about this gap thing. I know E-mini S&P is up 94, and it's like, the talk of gap is probably like behind us right now, but you never know. So I added this. This is the E-mini S&P. This is a 30-minute. This is a 30-minute chart, and I'm just going to extend that up a little bit. So there's two gaps that I like to think about, right? There's that gap from the lower rectangle, right? This is a gap from the previous session's close until where we opened last night. And that gap is usually it's pretty tight or non-existent, but because it's the weekend, and we have some extraordinary things going on, that you see these gaps in some of the more liquid equity markets, or more liquid markets in general. So that's kind of gap one. But the edgeful gap, right? The gap we go to edgeful.com, and that's spelled with one L, and kind of look at the statistics. I did a year look back, and that gap is from previous sessions close. regular trading hours, to this session's open, regular trading hours. And I have another rectangle highlighted right there. And you can see the stats right here as for a gap fill up, they call it, it could be a gap fill down or a gap fill up. This is a gap fill up report. A 1 year look back for a Monday, right? We could break it down by day. And it's 64% chance we're going to get this gap filled. 34% chance we're not. Now, I know what you're thinking, or at least what I was thinking was, wow, we're up so much today that for this gap to be filled, there'd have to be some pretty bad news coming out of somewhere. So, or just, profit takers had, I'm out and everybody just dumps. But I don't, right now it's looking unlikely, but we'll keep this up anyway throughout the day just to double check where we're at. The ATR today, though, is actually what surprised me the most, right? And so when I measured the ATR from the low of the day to the high of the day, let me make sure I got that measurement right. Right, the low of the day, and this is this session, right? I'm just measuring this session. I'm not. It has nothing to do with yesterday, and we see that right now we're at 76 and a quarter points versus the ATR of 103 points. So my takeaway to that is, all right. So if the ATR, and this is based on a 14-day look back, right? If the ATR is 103 and we're only at 76, well, there's potentially more room to go. And again, the odds here are, at least the odds, what I would think the odds are for the upside. So there's some upside potential here in the E-mini S&P for sure. Now, R3 is it's the pivot level, and it's very rare we get to R3. Now, R3 is at 58.43-ish, and if I just extend my ruler up just to measure that distance just for fun, we get to 104.25, right? Which is 1 point away from the ATR. So if I'm in a long position right now and it's going to be a long-term swing trade long position, and I don't know what a target is, right? I don't know what a target is. Then I'm going to look at that R3 level as a possible destination, or at least get close to that R3 level. So that's really on my radar screen. And we could take a look at some gamma levels too. And really, again, this is a positive gamma situation at Menthor Q. We have that blind spot up here at 58.30. So there's another target up there for the bulls to consider as we kind of just keep grinding up. Like I said, even the S&P up 93. Wow. Let's do the same exercise just for fun for the micro NASDAQ. And I'll go back again. We're going to look at these ATRs and we'll look at the gap fill. Remember, this is the overnight gap. This is the gap in the futures, and then the bigger rectangle here's the gap from regular trading hours, previous session till now. And so we've got a big distance again, no question about it. We have an opening initial balance breakout on the upside for NASDAQ. I mean, Tanya exploited that perfectly. Oh, what a great trade that was, by the way. And then again, we're only 322 low to high based on an ATR of 470, a lot of room to go. And look at that. There's that R3 again. It's just kind of sitting there saying, hey, look at me. So I understand that by casually looking at a chart, that looks crazy, right? Looks like a crazy target, but we've seen crazy happen. So, trend is your friend right now. And again, looking for places to buy dips, maybe that might not be a bad strategy. This is a 30-minute candle here as well. Let's go ahead and look at the gamma levels as well, just to make sure. And again, positive gamma situation. We have, the major resistance, JAX3, 1-day max are in our rear view mirrors. As a matter of fact, we'd have to probably get to and close below, or at least trade below or wick below the initial balance low to get there. We have an initial balance breakout on the upside. What we'll do it later on today. We'll look at for the edge report this afternoon. We'll see what the odds are for a double break of that initial balance, which would be a break to the upside and then a break to the downside. We'll get some great edge fill stats from that a little bit later today. But anyway, we're driving up again to that blind spot as well. So this market's on the move. Lastly, but not leastly, let's just for stock index futures anyway. The mighty Russell. How about the mighty Russell? The mighty Russell is up, by the way, 2.42%. That's right. this is the winner chicken dinner of the stock index future sweepstakes today, and it's a smaller, it's less volume, I understand, 78,000 traded only, but it's still a market to think about when you think about small caps really getting a kick out of this. And so I mean, let's check this out from an ATR point of view. As it just explodes off my screen, it's going to be up on my monitor, my higher monitor up above here. We're literally just breaking out of that initial balance big time. The last two 30-minute candles. We have gaps way down here. Again, there's a 58% chance we're going to fill this gap, a 42% chance. And I shouldn't use the word chance. I apologize. This is historically what's happened over the last calendar year. I have a 1 year look back, and Edgeful allows me to look at a Monday in particular to say, hey, when you see these gaps, what historically, what percentage of them were filled and were not filled? And again, gap full up here. So a little bit more than a 50-50 value proposition. But again, today just looks like, manic Monday, mega Monday, whatever you want to call it. I mean, it's just moving here. The ATR itself is 40. All right, here's where this is interesting. This is where we get interesting. The ATR is 48 points. The range so far has been 42.2, which gives us 6 more points on the upside to achieve the ATR. So that would be 31-ish, something up in here, probably far away from our 3. Yeah, far away from our 3. So I would be a little bit more interested in, like, all right, maybe thinking about the upside potential on all 4 of the stock index futures and see which one has the most and which one has the least. But again, it's been really strong, 2.37%. Oopsie, on the Russell. Sorry about that. My earbud just fell out. Let's keep moving here. One thing we're going to talk about more and more, and we should talk about more and more. Let me get back to my my regular chart, is the Bitcoin market. We have a micro Bitcoin here, again with that same gap up, but we're looking at and we got some great gamma levels here too, by the way. We have JAX1 right here at the 1 day, and we've lost that in the rearview mirror approximately around midnight last night, right? And remember, cryptos, they trade all the time. They don't stop. They just keep trading. So big rally here for sure. Let's see, from a percent point of view, 5.13%. 5.13%. That's a pretty good move to the upside right here. Nice kind of, the initial balance is kind of is relatively, I shouldn't say small. It's relatively large, but it's prominent, right? The top of the initial balance is 88,860. The bottom is 87,265. So this market's digging it today. Again, we talked earlier about this morning when we first started our sessions this morning about maybe a risk-on environment, and it's looking like that still to me. It's looking like a risk-on environment. We're past R3 on this now. The Bitcoin futures, they probably are the least sensitive to pivot levels. Pivot levels, maybe on a slow day, maybe on a low range day, I'll look at pivots. Here, I'm going to kind of like, yeah, okay, they're there, but they're going to be a little bit less important. Let's see if we got the same gap fill report here. Again, you can go to edgefill.com, and you can get these gap fill reports, and they're awesome, as well as the breaks. We don't have a break. Those white lines, remember, are the initial balance. We don't have a break above or below. We're trading within that, right? And again, we'll look at what those odds are for a double break later on today. But right now, this is interesting. On a Monday, on a gap up, 1 year look back, that's what LB stands for. 27% of the time it's filled, only 27, compared to closer to a 50-50 value proposition for the stock index futures, and a 73% chance that we're not going to get filled. So having that said, what does that do to my bias? Well, now in my bias, I'm looking for dips to buy, right? I'm looking for dips to buy we'll have some good stops here, but again, and I would do some more rectangles here and just kind of look at where it paused, right? Look at where it paused. Look where, we kind of had a nice area of support. And then we have another nice area of support, another nice area of support. So this market's kind of stepping up. and it's looking pretty good. 88 at 130. I think the next psychological level is going to be that 90,000 level. Again, totally achievable today, by the way. And I don't have an R4 on here. If you wanted to add an R4, if you wanted to get crazy, it's just the same distance from R2, right? So you go.
R2!
What's the distance between R2 and R3? And then whatever that distance is, add it to the top of R3 and you'll get R4. That was startling. I was not ready for that, Kevin. Thank you. All right. So that's the story of that. Let's go back and look. The other one that we want to look at a little bit is Ether, and Ether is on here as well. We have about 6,000 traded so far. It's a little bit of a, it's a smaller volume market, but I think it's obvious that these crypto futures are going to get more and more attention and going to get more and more steam. The Sol CME Group just announced the launching of Sol, right? Solana, which is another one that might also become pretty interesting, pretty popular to look at. But again, looking at this intraday chart, it charts nice, 30 minutes. We're still in that initial initial balance range right now, right? We've kind of traded sideways since the open, regular trading hours. Overnight, look at this move overnight. I mean, we went here's what we did. Previous sessions highs broke through. R1 broke through. R2 broke through. London session all the way up to R3 broke through and then kind of stabilized sideways here. This is a capital P-shaped volume profile, so this point of control is pretty significant on the upside. Anything could happen, of course, but I think there's some nice areas here that you could kind of call out. And I'm going to go ahead and just throw some rectangles in here. I mean, literally, nice area of support. We haven't had a body of a candle. Well, heck, we haven't had a body of a candle close in this area since the 4 to 4:30 candle. I mean, I get up early, but I don't get up that early. So that's kind of a really kind of important area. I feel like of support. And if you want, the height of your rectangle is a little bit of art as opposed to science. The top of the rectangle is science, but I'll just pull it down here to cover that little break that we had early this morning. So these are pretty good. These are going to be, we have a new administration. It's pro crypto, and we're going to get more and more volume in these things, and more and more trading in these things. So we're going to be doing more analysis on these as well. So any questions on that, feel free just to pop it in the chat. We'll chat about it more. I know a lot of you guys are into this crypto stuff. Scott K says, R2 never gets old. I know. Let me just pop this up here, make it easier for me to, and my old eyes. I got old eyes today. All right, let's keep moving here though. Let's Tracy was talking about crude. Let's kind of look at crude a little bit more detail. And remember, this is pretty bullish setup from an options point of view. We have this. What's really interesting to me is, and this is why I love these option level. I'll call them options levels, right? We got call resistance, we got gamma walls, we've got JAX1, I got JAX2. We have these gamma exposure levels, which could be confusing. I get that. I'm often confused by them also, but we're getting better. We're getting smarter. But it's amazing when you see a market like this just hit up against it, right? Just hit up against it perfectly. We wicked to it. That was and these are 30-minute candles I'm looking at. I'm not looking at a 5-minute candle. So this is 10 to 10:30 candle. Again, we closed right at it, right? We wicked above it, but we closed right at it. The next 30-minute candle closed a little bit lower, and now we're trying to break on through again. So 1, 2, 3, 4, the last 2 hours we've traded around 69 even. We might not be done trading around 69 even later on in the day. I don't know, but this is a pretty good area. R1 in the rear view mirror, previous sessions highs, rear view mirror, JAX3 rear view mirror as well. And I'm gonna have to adjust probably. No, I won't. Again, from an ATR point of view, me and Tracy talked about this. We've got some room to the upside. We got another 43 cents possibly on the upside. So again, this is looking to me like, hey, let's look for some places to buy some dips until something changes, right? Until some news comes out or until maybe one of our key levels gets breached on the downside. Drawing a fib line here doesn't help me at all, really. I mean, I could do an extension maybe. Let's do that. I'll just show you how to do that. I'm going to go to the pencil tool. I'm going to go down to fib extensions or F9 fib extensions. I'm going to activate my mouse and it's a 3 point move, right? So I start with the low, I'll go to a high, I'll go down to a retracement low. Now this retraced a little bit too far for me to be too excited about this about these levels, but we'll go ahead and add it anyway. And then I click and then I painted it on my chart. And so these are extensions, right? And then when I'm thinking about a breakout to the upside, now I have another target. 123.6% is the fib number. 69.31 is another level, another target right above JAX2, right above R2 as well. So there's room to go, but it gives me kind of an intermediary glimpse of possible things that might happen, and then you could kind of squish your chart down a little bit. You'll get the 138, the 150, and the 161 extension levels as well. Remember, 3 points: low, high, retracement low. This low has to be higher than this low, right? The retracement low when you add your third click, your third data point has to be above the previous one when you're going low to high. You could do the same thing high to low too. Doesn't matter. So that's the story of crude oil. We'll see what happens at the end of the day. Let's keep rolling here though. We talked about gold. We talked about silver. Let's go to the 30-year Treasury bonds and the 10-year notes. Both of 10-year note. Okay, 10-year notes. 30, let's do the 10-year. I think the 10-year makes more sense. We'll start with the daily though, because I think the daily is pretty interesting. It's telling the story right now of this. Again, my hamburger bun is we have all sorts of buyers wicks. Let me see if I can. This watermark thing is driving me crazy. Hang on a second. We could move it up a little bit. So nice support. We're just trading at it right now. 110, 18 halves, and this has been support since, well, really, we haven't had a body of a candle closing there since February 27th. And so buyers are coming in, buyers are coming in, buyers are coming in, buyers are coming in, buyers, 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 buyers. That's what all these wicks represent. Now, today, there's no wick at the bottom here, but the day's not over, right? The day's not over. So until we get a close below these little wicks down here and below my rectangle, closer to the 50% retracement, I'm still going to assume we're going to be range-bound trading here. It's a relatively big range, right? The top of the range is a 111, 11 halves, but still range-bound nonetheless. Moving averages are still kind of in parallel, really, right now. There's no crosses in action or anything like that. RSI is at 51 on this. So again, we'll see if this could become a benchmark candle. We could keep moving down here. My guess is some of this downward price action is based on just kind of an inverse relationship between equities and the interest rate products. Here's what it looks like on a 30-minute. Well, let's go to a better 30-minute. My bad. Let's go to the 30-minute with the gamma levels on it. Put support 110 in 16-30 seconds. Now this market in particular actually trades in halves, in 64ths, not 30 seconds. So, but since it's at an even number, I'm going to say 110. 16-30 seconds, just kind of doing the math in my head. You could call it 110 half because it's a half point. And then if there was a 5 behind it, I would say 110 and 16 halves. So call it 110 and 16. That's kind of the put support level right here. We haven't approached it yet. Last 3 candles are trying to get there. We have a bad volume distribution here. Now remember this particular market, I want to show this on a trading ladder really fast. Hang tight. This is a NinjaTrader Superdome, which is awesome, by the way. I got to fix the color so you can see them better, and I'm going to go ahead and change the market to the ZN. And look at the bids and offers. And I know I have to darken up my screen, so I'll just read them to you. I mean, we're talking, there's 2,600 on the bid, there's 1,900 on the offer, but above that, you got 4,000 in the order book, 42,000 the next tick up, 48,000 the next tick up, 5,000 the next tick up. This is really, really thick. I said this yesterday. This is a great market, introductory market for you to trade the interest rate products because it's got a lot of volume here. It's got very tight bid-ask spreads. With volume like this, you need to have you're going to have tight bid-ask spreads, and it moves kind of in a trends, it moves in a logical manner. As you go up the yield curve, then you have another version of the 10-year notes, the TN. It's called TN, is the symbol, and that's a true 10-year note. And you might say, well, what do you mean true 10-year note? How could there be an untrue 10-year note? Well, it's based on the basket of deliveries, right? So a true 10-year, the maturity rates, it's closer to 10 years. On the ZN, the one with all the volume, with 875,000 contracts traded so far, the duration's a little smaller in that basket, in this basket. So that's all that is. And then the 30-year bond's up next. It even has a bigger ATR. Right now, it's about 29 ticks. Let's take a peek at that guy really quick. These guys are going to, oh boy, hang on a second. Let's just do an inline adjustment right now. See if I could, there we go. These guys move in sync, the 10-year and the 30-year usually. I know some people spread them, right? But they do the knob spread. But again, this gives you bigger range. This gives you bigger range on a daily basis, which means it could be a little bit more risky. So that's why I'm saying, hey, start with the 10-year note. Get some muscle memory going. See how it works. See how the math works as you go. Oopsie. Something bad just happened. If I missed a question, type it in again. Sorry, sometimes the scroll goes too fast for me. Sorry about that. Okay, so yeah, Short Life Hack says I'm more of a tut spread person. The hedge ratio is easier. Yeah, so when you're trading spreads, there's like if you're doing a knob spread, it's 5-2 maybe, depending on you generally speaking, 5 contracts versus 2 contracts to keep that kind of margin in sync or the range in sync. But in any event, we're right at that high vol level right here, right now, on the 30-year. S2 is, didn't spend that much time. Opening range is maybe a little. So I'm always like conflicted in my head. Is the opening range and the initial balance, how important are they with respect to the equity open, right? The New York Stock Exchange. And I used to be like, no, the Treasury bonds, they're at 820 market. That's when they open, 820 to 830. That's when I start my initial balance. That's when the dealers are getting involved. And that was historically, that was my thought. But these markets are so interwoven. And when the bell rings, just so many people participate in these markets that this initial balance on the New York Stock Exchange Open has become super important to me, right? More important. I've changed my mind, in other words. So I like to look at that. And, it's a pretty decent size range. This is a benchmark candle right here because, well, it's not hard to figure it out. It's the biggest candle on the whole chart by a mile. It's not even close. So what does that mean, benchmark candle? Well, a couple things. One, it's kind of setting the pace for the rest of the day. Two, when I look at the candle, I want to look at the midpoint. It's called the piercing line. If you read a charting book, which I read a lot of them, by the way, it's called a piercing line. And as long as we're trading below that piercing line, I'm still kind of bullish. I'm sorry, bearish. Once we start closing above the piercing line, then I'm thinking, okay, we could have a decent retracement or even a turnaround in direction based on that close above that piercing line of that benchmark candle. We're nowhere near it right now. As a matter of fact, we're about to make new lows here after 3 doji candles right at that HVL 0 DTE level. So nice trending markets. Put support way down here by S3 at 116 even. That's the story there. Now, there's one more level, by the way. There's one more level. There's the ultra bonds, which even have a larger ATR or a larger range. And this is, I'm sorry, I do not have the, on this particular market, I don't have gamma levels. So you get this little red rectangle here, but it looks exact same as a 10-year note. If you just had to if you printed out the charts and held them over each other and did the light test, right? You hold them up to the light, they look really similar, except this one has a little bit less volume and it has a bigger range. So that's why I like to stick with the treasuries. Flight here says he likes Hekinashi. We have Hekinashi on our charts, by the way. I'm not good at it, so I'm keeping it off, by the way. Yeah, ATR, so average true range is just it's like a moving average of the true range. I know, it's not the same as the true range calculation is a little different from just, the high and low of the day, right? It's a little bit different than that. But without getting into the math of it, it gives us a better kind of look at, and let's go back to the mini S&P as an example. It gives us a kind of a better look at what the expectations are. That's all. And when I added it to my market analyzer, and you could set the great thing about the NinjaTrader software is you could set you could set your ATR to whatever period you want, right? You could set it to 21, you could set it to 15, 10, whatever. I set it to 14. That's kind of textbook. It's, I put my mouse over the header and you can see a little flag there that says daily ATR 14. And that's just how I do it. But, sometimes it's important to note, especially think of it this way. Let's say the ATR right now is on this particular market that's up 1.55%, by the way, is 103 points or 103 handles. And let's say today we are trading in a 60 handle range. They would kind of set off a little alert in my head. A little alert and said, okay, it's probably likely, not for sure, but it's probably likely we're going to have we could have a breakout one way or the other, and that breakout could be significant. So breakout traders like to see this kind of data also. Oh boy, that's the story of that. That's why I love it. And Tom Schneider turned me onto that. I didn't, and Mike Burke, those cats turned me onto it. I didn't make it up myself. No data on the equal weight futures yet. Wish we'd get some people trading that as well. Let's just shoot over real quickly to the Euro FX daily chart. We had that double top we've achieved. And it was a pretty nice, we closed above it. We closed above it again. I could show where it was. We'll go back. Really nice touch point right here from November 5th, 2024. Big sell-off, big rally. We closed above it twice, actually, and then sellers came back in and took us back down. But this all represents U.S. dollar weakness, U.S. dollar weakness, U.S. dollar weakness with a little bit of a turnaround, at least with respect to the Euro FX U.S. dollar cross in the futures market. And not only that, though, we kind of tracked the ADMA all the way up. This is a daily chart. We tracked that ADMA nicely. And then, boom, we had a wick touch it. Then we had a body close below it. And so that was kind of a tell, right? That was kind of a tell for me anyway, that, hey, excuse me, that maybe we're turning around a little bit here, right? Maybe we are turning around a little bit here. So look for that ADMA on a daily to kind of help you decide who's in charge. Today, clearly the sellers are in charge, right? We're trading below it. We opened below it. We're trading below it. Buyers tried to give us a rally, didn't even make previous sessions highs on the euro, which this is the 1, 2, 3, fourth day in a row of a lower high. And we have 1, 2, third day in a row of a lower low. So we'll see the next step down. Really, let's draw a fib line. Let's draw a fib line. We'll go low to here. We'll go from the low here. This is when this move started. All the way to the high. And then we have a fib, right? We're, 23.6. That doesn't get me too excited, but 38.1 does, as does the next 21 EMA as well. The other thing I'd probably do on a chart like this, I would go ahead and add an anchored volume weighted average price, or anchored VWAP. I could right click on the chart, go to drawing tools, move my cursor to the Saga menu, and go to order flow VWAP. Click on that, and then again, I'm going to my cursor is activated. I'm going to start it on the 28th. I'm going to drag it all the way forward till now, and then we'll see that white line there. That's that anchored VWAP. We should actually do this with an E-mini daily chart. We'll do that in a second. But you see there's a lot of price separation. It's converging right around that 21 EMA, right around that 38% retracement. So there's a lot of stuff going on in this area for the Euro FX. Again, though, buyers are still in charge from a big point of view, but recently not, right? Sellers are, at least today, sellers are in charge. Let's do that same exercise with the daily, just to kind of see. Daily E-mini S&P. Let's let my chart reset here a little bit. Okay. So what I would do is when I'm looking for these anchored VWAPs on a long-term chart, I'm looking for the trend, just like I would a fib. Nothing different here. The trend is high to low, right? We have a really high peak, a really low peak. So again, I'm going to right click. I'm just going to go to my drawing tools. I'm going to go to anchored VWAP, order flow VWAP. I'm going to click it, drag it all the way to the contemporary candle. And wow, look at that. Brian Shannon's going to love this one. We, we, I should have drawn this line like 4 hours ago. But so this is the white line, and we're right up against it. And that's such an important level, right? That's such an important area of interest. And as Brian would argue, and I would argue too, is when institutional investors kind of get involved, they use the VWAP. They use that VWAP to get it in or out of positions. Now, we don't have a close above it yet. We're sitting on it right now. The other thing traders use this for is support and resistance. Well, right now, it's looking like resistance that's about to be broken through, right? And if we do break through it, then anchored VWAP traders on a long-term basis would say, okay, the momentum has changed now. Now buyers are in charge, and we're trading above VWAP, right? So the bias there would be a little bit bullish. In any event, I wish I would have drawn it. That's a really nice look. You could even draw it. You could even draw it on an intraday chart, or you could just anchor it from the start of the day. Same technique, or you could just apply it from the studies. There's so many lines here. Here, let's do it on this other chart. Let's do it on this cleaner chart. Bear with me. Let me move all of this stuff over, get it out of the way. And then again, I'm going to do the same thing here. I'm going to right click, and I'm going to go to drawing tools. I'm going to boom, boom, boom. Where's it at? Order flow VWAP. And some people, I know Anthony likes to do this. He likes to anchor it from the open, right? 9:30 to 10 candle, move it across, and just kind of use that also as a guide for his bias. Or at least, I don't want to put words in his mouth, but he definitely uses this as an important area of support and resistance, and I do too. So you could anchor it from the start of the session, and you could do them both. Let's do them both. Let's not even hesitate. Let's not even hesitate. Click to click. All right, so now we have two, and obviously they're going the same way. They're in parallel right now. And the one from the open is probably more important, right? This is going to be an area of hopefully support, an area hopefully where buyers come back in and push us back up. But needless to say, it's kind of like some people use moving averages, some people use Bollinger Bands, some people use, whatever you're using is valid. But this anchored VWAP, a lot of traders use, so it's kind of important. So I'm going to keep that on there for now, and we'll see how it goes later on in the day. Well, hopefully anybody who was here new in the chat, you saw Tanya's trade in the NASDAQ. It was spectacular, by the way. Let's go take a look at the NASDAQ while we're at it. She was very poised, right? Very poised. That's something. and just nailed it. It was super, super awesome. The VWAP thingy. Anchored volume weighted average price. If you get a chance, you could Brian look for Brian Shannon's book. Brian Shannon's book. I just recently read it, and it's a great technical analysis book in general. But he really he makes some good, compelling arguments on why it's important and how to use it. So that's pretty cool. And we'll do it here too. Let's keep rolling. Yeah, it's going to be similar to than we saw on the E-mini S&P for sure. But point of control here is pretty tight. It's relatively big on the micro NASDAQ. A lot you don't get the same kind of really clean volume profiles on the micro NASDAQ that you might with the E-mini S&P. And I think that the reason for that might be kind of obvious. I think because you have if again I'm going to go to the trading ladder as my demonstration here. Of course I don't have it up, but let's go M and Q. Super easy to do. And you can see the price action, and even now it's kind of slow actually. Price action it bounces around a lot, right? It's moving up and down a lot. So every time a trade happens at any given price, you're going to get these histogram bars are going to grow. They're going to get bigger. They never get shorter. They just always get bigger. And so the because of that, you have and well, today is unusual, of course, but because of that, you don't always get the really nice refined profile, bell-shaped curve that we like to look at. But this one's pretty good. I mean, the value area, the bottom of the value area is down here toward the bottom of the initial balance, right above R2. And I'm just going to estimate that at 2237. And then the top of it, notice there's no volume, there's very little trades above the value area, right? That's one standard deviation. So the top of that value area is at 2366. And that gives me my shorter term range for today. And I'm gonna up my game another level here, and I'm gonna add an anchored volume profile. You can do that also. Order flow profile, click and click. And now I'm going to look at this volume profile from the open forward. From the open forward. And that gives me a little bit better look of what's happening after the bell rang, after the news was digested. The point of control is the same. Not surprising. You have that volume smile, right? Where you have way more volume on the open and then usually way more volume on the close. And in the middle of the day, it kind of sags down. That's why it's a smile. And so that's one reason why that point of control is the same. But if you look, but the rest of it's not the same, right? The bottom of the value area now is 2301. Top of the value area is similar, right? Top of the value area is similar. But again, it gives me some guideposts along with all of my other stuff that I use, including the gamma levels of what to do, right? How to participate. And now that we have this view, we're going to just delete that for a second. I'm going to add a fib line now. I'm going to go low to high. And again, all I'm doing is analyzing from the open in New York till now. And I'm using all the same tools that we always use to help me kind of refine entries, exits, and all of that stuff. One thing that's not lost on me is the second half hour candle. This has a big wick at the bottom. This wick represents buyers coming in, overpowering sellers, pushing us up. The next candle, big wick at the bottom. Next candle, big wick at the bottom, although there's a decent sized wick at the top, right? This is like a spinning top type of formation, previous candle, smaller body than the previous, smaller body than the previous, smaller body than the previous. So the bodies are getting smaller, but every time we get dipped below that point of control, the last three candles, buyers are coming in and pushing us back up. In my humble opinion, this rally is not over. I mean, we're still going, going. Now, eventually, we're going to get some sellers come in and take us down again. But the gap fill, I think, is probably not going to happen today, in my humble opinion. I've been wrong before, though. JT says MNQ is pulling right into a 200 SMA on the daily. So I wasn't a 200 SMA fan until today, because Tracy was. So I am. Let's get to the daily if it let me. So I have this on a continuous chart. There's a couple of different kinds of charts you could have. You could have non-continuous. I have it on a continuous. And that's my 200 moving average. So where are we at there? We're trading at 353, 493, which is very much in tune with the ATR, by the way, is that 200, according to my calculations. So we're getting there, JT. We're getting there. All right. Any other markets we missed to cover that you want to talk about? Nat gas is down a little bit. Heating oil's up 0.26%. Why do I have 2 months on there? I got the May. We're trading the May, not the April. I'm gonna have to delete the April from my market analyzer. The symbol for May is either May or the letter K. For those of you keeping track at home, the letter K. RBOB, also in May. That's gasoline. That's up a little bit, almost a 0.5%. Gold is still behaving itself, pretty much unched on the day, only down 1.9. Silver's up a tad, 3.5. We talked about platinum. Where's my palladium at? Tracy had me add palladium to that. This chart is crazy. The yields right now are, we talked about this morning. The yields right now are about 35 basis points separation between the 10-year and the 2-year. And we're at, on the 10-year, and Anthony even nailed this morning, 4.32 yield. So we were below the 4.3 on the 10-year. Let's just see what that looks like. Let me just pull that up real fast on let's get a 15-minute going here. Again, I'm not going to have Mentor Q data on here, so you're going to see that little red error message on the bottom. Ignore that. Let's hit that reset button real quick. Yeah, so 4.3, I'm just going to draw my crosshairs, is right around there. So we've been trading above it most of the day, right? With the point of control right here. This could be the final destination, this point of control, 4.311. We'll see. We'll see. Remember, inverse relationship between this and the regular, in the Treasury, the prices of the Treasuries, actually buying and selling Treasuries. Got a couple seconds left really quick here. Grains, really nothing out of the ordinary. Wheat's up, down $10. I guess that's something, 1.79%. We'll explore why later on today, but everything else seems to be behaving themselves. All right, so this afternoon, let me just put this back on the main event, see if we can get to 100. Could we get up 100 on the E-mini S&P in June? 100 handles, wow. I don't know if I have the right cheat sheet to know who's coming up this afternoon. Order flow labs, guys. So my guess is Nick and Leo. I think I'm probably right on that. They'll be back here 2:30. We'll do an edge report at 2:30. Nick and Leo's back and do live trading the open. Those guys are awesome, by the way. And then I am going to have them also at a midday. So I'll have Nick midday. I think it's Nick. No, it's Leo tomorrow and then Nick on Thursday. And we're going to do a little bit of a deeper dive interview on them just to see, how they got to where they're at and get some more details on what they do. But also we'll analyze some midday markets. So having said all that, thanks for being with us this morning. We had a great session with everybody involved. Tanya, awesome trade. Keep it rolling. We'll see you this afternoon.